Random rewards are so sweet. Honey's all that I can see. Blame nature, why don't you? I make no apology. I'm in love with a meme. About as real as a dollar, and it makes me wanna scream. I wanna be a millionaire. I'm not weak or lazy. I'm like electricity. I'm the path of least resistance. Always lies the way for me. I'm in love with a meme. About as real as a dollar, and it makes me wanna scream. I wanna be a millionaire. Go dash, 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 dash. Go dash, 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 Doge Daddy, yeah. Go dash, 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 dash. Go dash, 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 Doge Daddy, yeah. Dancing Teslas and SpaceX. This techno king is on a roll. There is no shame in his game. He's having fun, he's in control. I'm in love with a meme. About as real as a dollar, and it makes me wanna scream. I wanna be a millionaire. Go dash, 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 dash. Go dash, 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 Doge Daddy, yeah. Go dash, 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 dash. Go dash, 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 Doge Daddy, yeah. I see stars when I hear touch. Forget the moon, I'm off to Mars. Cash is trash, is confetti. So dollar bills can kiss my go dash, 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 dash. Go dash, 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 Doge Daddy, yeah.
Hello everybody, welcome to Bitcoin Not Daily Fomc meeting live. I hope you are having a nice time. Stuff coffee. I need to clear the throat, you know, that's what we YouTubers do. We clear the throat just before we start, you know, live streaming, so it sounds better, so, you know, the words can come out of the, you know, the mouth. How's everybody doing in the chat? I see there's a lot of, you know, excitement going on. We got 75 people watching. We are watching 1 second chart over here. It's gonna be very, very interesting what's gonna happen. 25 BPS or, you know, 50. We are not a little bit unsure. You know, we're gonna zoom out a little bit because, you know, one second chart is not telling us anything right now. You can see up here we got some kind of resistance line up here. This is the Fomc meeting line up here, exactly on the dollar up here at 8 o'clock. So, you know, we got a couple of the 5-minute candles left. This one and one more candle left. And we are getting ready to, you know, pump or dump, guys. Pump or dump. That's the big question. What's gonna happen next up here? And I don't know if you remember, but you know, today I said that, you know, this move up here looks very much like exactly, like perfectly like this move over here. Over here. Yeah, I mean, it's not actually, but you know, it is, you know, kind of, you know, very, very bullish pattern. So I would assume that you know, this is still, you know, just as bullish as this part over here. Still looks a little bit different, but let's see up here on the 4-hourly time frame. Yeah, it looks a little bit different. It's not exactly 100% because it needs to wait, you know. If we didn't have to wait for the Fomc meeting, we would have already done this move up here. Right now, you know, on the 1-hourly candle, we actually managed to drop below a certain moving averages. Right now, we're picking up a little bit again. This 4-hourly candle up here on the 1-hourly candle, 6 minutes left, so we're gonna go up here. There is definitely some kind of resistance just above us up here, and we got some kind of support line down here, somewhere over here. Where are you gonna find the support line? Something like this over here, maybe, give or take. So there we go. We got a triangle up here, very, very nice. The moves are gonna start hitting very, very soon. 6 minutes left. Who's in the chat? Let's go through chat very quickly. Naruto, yo, what's up? Sola, Claudio, yo. Roshten Army, Garrett, Martin is here. Justin, what's up? Hoping for a blood bet? Nah, not quite. And Marie, evening, what's up? Make money, S, what's up? Rami, how you doing, man? Let's see those liquidations move in both directions. Yeah, liquidations move in both directions. That's definitely gonna happen. Let me just remove a couple of stuff up here on the screen, so, you know, make it a little bit nicer. Let's remove this over here. Let's remove this guy over here. This penny guy over here. Let's remove the text up here from there, and let's remove the moon. Where's the moon? There's the moon. There we go. Now we got a nice clean chart, so we can actually watch the stuff up here. And how do we remove this thing over here? Wait, there is one more thing that's I don't know how to remove the thing. Wait, it's not this one. There we go. Now we got a nice clean chart over here. Who's more in the chat? Dimut, yo, what's up? Diamond Angel, should I sell my crypto and wait for the result? Just leave it. I don't know, man. These things do pop, you know, very, very volatile. It gets very volatile. We are ready to, you know, enter the position very, very quickly up here. Bitcoin up here, and we got a 50x. No, we're not gonna do 50x. We are not crazy, right? We are not degens. We are normal people that do 10x. So, you know, we get $100. We're gonna definitely, you know, start moving in the $100 very, very soon. As soon as, you know, we're gonna trade the breakout. We're gonna be breakout traders, and never ask such a question. But that's why you do, man. It's going to be a good news in my opinion. Jimmy Stevens, let's get some volatility. Yeah, volatility is gonna kick in soon. Sputnik, what's up? How you doing, man? Joshua, dollar cost average. Yeah, pimp it. Mladen is in the chat, crypto optiker up here. Let me just go very, very quickly up here. Drunken ass Naruto, Rolo, here, Joshua. Hopefully my dreams come true about DXY going down to 78, maybe. I like Talres, Jordan Camera, and delayed adopter, the best, and the crypto zombie. Nice, Joshua. Thanks, man. Appreciate it. Who more is in the chat? Told the gag moon landing or crash. Yeah, we're gonna see that. I'm a little bit, you know, everybody's a little bit, you know. Can you check the group? Yeah, I can check the group up here. Just a second. Hold on to your seats. Dutch Ring Racing in the chat. Mario, Gordon, yeah. Hold to your seats, guys. Hold to your seats. It's gonna explode very, very soon. No 5 minutes break there. No 5 minutes. There will definitely be 5 minutes break. I can tell you that right now. We are not degens, of course. Scalp longing here. Yeah. So what is 46 dump pump to the yearly? Pump to the yearly. This is 2018. Pump to the yearly 46,000. Yeah, Marlon thinks that we're gonna pump to the yearly close 13,863 up here, and to the yearly close is 46,000. Is it 46% down over here? 46% down here. It might be just that. I mean, if this is correct, man, if this is correct up here, 46% from the bottom to 46 up to the yearly. If you get this right, man, you're getting all kinds of bragging rights. Close 50% right now. Let's see what happens. I'm in a 65x. Degen is my actual name. No, it's not, man. No volatility range between 22.9 and 23 until the next Fomc. Don't be like that. There is no way. There will be volatility, guys. There will definitely be 100%, you know, huge volatility very, very soon kicking in. The line is down there. We are right now in some kind of triangle. We've been going into this triangle for a while over here. We got 2 minutes left until the Fomc meeting up here. Let's go on to Twitter. Twitter is always first to know. Latest. Let's go to the latest up here. See if people are results in just a few minutes. Are you ready? Let's go Fomc meeting. 3 minutes, 2 minutes. Ready for no way. Let's see what I was saying. Federal Assembly expecting 25 BP hikes up here. Yeah, we are expecting 25 BP hikes. So it's gonna be 50 0.5. I don't think so. I think it's gonna be 0.25. So that's actually good. 3 minutes left up here. I have absolutely no clue what this Chinese or Korean stuff is. This is Chinese, I think. No, this is Korean. Korean text. So what is Koreans are saying, I have absolutely no clue. But I do understand Fomc. Up here. Going to Fomc, what can we expect? Headline CPI has decreased a good amount thanks to lower contribution. Yeah, also core inflation rate is important, but we're gonna understand that very, very soon. We're gonna be like, definitely like degens, and you're gonna go long and short on the first breakout, guys. On the first breakout, we're gonna go long or short. Also, as soon as the stuff starts happening, let's go a little bit down into the time frames up here and see what's gonna happen up here. 1 second time frame. Where we are we above the line? This line doesn't seem legit. Something is wrong. When I go to 1 second time frame, I mean the line is all the way down there for whatever reason. Oh my god, did it already start? You can see up here the volatility is already kicking in. I think we need to watch it a little bit on a little bit bigger time frames. This 5 minute time frame over here. Let's see 1 minute time frame up here. Can you see the chart? Everything is nice. We are still in the up here in the moves. The big dump up here came. The first move up here already happened. 1 minute left. Does somebody know something, guys? Does somebody know something? I'm a little bit unsure. Let's see up here, chat. How many seconds do we have left? 3 seconds left. Somebody knows something. The first dump is already happened. Let's see up here. Let's see up here. Where is I'm sorry, I'm a little bit, you know, lazy when it comes to this up here. 30 seconds. No, it's already happened. It's already happened. Where is the Fed rate decision? Can we just write interest rate? Breaking US interest rate decision actually 475, 440, the previous 4.5. It is 0.25. Big move down, volatility just, you know, hit through the roof down over here. 2 red candles after each other right now, and it is getting very, very interesting. Like, you know what we're gonna do? We're gonna say that this is actually very bullish, and we're just gonna go, you know, for more stuff right up here. Buy long, confirm. There we go. We got a long position, and right now, of course, we are in a long position over here. So we're gonna see how this actually plays out. Over here. Do we pump or do we dump? I mean, we already had, you know, 2 dump candles up here trying to dump down towards downside candle. We are still not out of the triangle yet. We can go to 1 minute chart up here, and you know, the move down here is already something like, you know, 0.65, so, you know, 6% down. We are still not out of the triangle. We are still inside the triangle, guys. We are still inside the triangle. Look at the wick on the downside. I think it's gonna go up. I think it's gonna go up. We made the first move. The first move is legit, and I think you know, this first move is happening right now. You know, it's breaking towards upside up here right now. A little bit. It's not doing that well. I gotta tell you that it's not doing that well. Let's go to 5-second chart up here and see, you know, if this is gonna continue up here. The volume up here is climbing up a little bit up here on the 5-second chart. Long to hell. I don't know. There are too many bullish people. I mean, 25 was expected, so it should dump towards the downside. Yeah, it's kind of failing. I think we need to close the position. I think we need to close the position. Don't you guys think? But you know, it's still bullish engulfing candle up here. Over here, this one, you know, 5-minute time frame. Let's see 1 minute time frame up here. It still looks okay. I mean, there is huge volatility right now. Huge volatility. People are trading this up and down. People want to dump it. You know, somebody wants to pump it. What's gonna happen next? It's not pumping that fast. That's what's getting me worried. You know, it's not pumping that fast. It is going up a little bit up here. You know, Bitcoin is up 0.22%, and right now it's kind of losing steam already. And already broke the trend over here. So we're gonna close the position up here once it gets to the top up here. We're gonna watch the 1-second chart up here. There we go. It got rejected by that move. Double bottom up here. Let's see if we can actually go, you know, bounce off double bottom up here. Still getting a little bit of time. Still getting a little bit of time to bounce off the bottom. Nah, it's kind of losing the steam up here. It's going into some kind of falling wedge up here. If it breaks down on the falling wedge, I'm going to close position. I'm going to close the position. I mean, it's losing the steam. How can you lose steam so fast? Yeah, so we're going to close the position. Nah. What do you guys say? Take profits. There are no profits, man. There are 0 profits. It still didn't close below anything over here. It still didn't close below anything. But bears are winning, so we're gonna close position. We chose the wrong side, guys. That was the first move. It came down to the, you know, maybe retesting, you know, the support line up here. There is no support line. It just goes right back down, up, down again. You saw, I mean, we started going up here, you know, very nicely, but there was kind of no move on the chart. There was no move on the chart. And it kind of lost the steam a little bit up here. Now there is a huge volatility still happening, and I mean, we are still technically inside the middle of the triangle. Are we gonna wait for the Fomc, you know, for the you know, Fed meeting, you know, conference? 100x leverage is fun. Just made 2x on Bitcoin. Nice. Taper. There are no profits. We are actually, it's in the middle. It's the middle of the ballpark. It might actually, you know, but it didn't drop down. It didn't drop down big time. You know, it's still doing nothing. It's still literally doing nothing up here. And why are the lines on 1-second chart so skewed? You know, I don't get it. I don't get it. The lines on the 1-second chart are not where they should be. See, on the 5-second chart are a little bit better. I don't know why on the 1-second chart the lines are not where they should be. You're not playing the song Dodge Daddy. If you play it, it will pump. We're going to end up in the same place when he starts speaking. Yeah, probably. We're probably gonna just, you know, go a little bit up. I mean, look at this up here. Look at the top up here. Look at the bottom down here. Nothing is literally happening. Nothing is literally happening. People, bears are trying to push it down. Now the decision is actually good. 0.25% was expected. It is good. So I was expecting this move down, but they're trying to push it down. But the people are so bullish. The people are so bullish. Okay, when these trends, we can actually watch the 1 second chart up here and say when the trend breaks, we go long again. We go long again. How much profit did you make from the trade? They didn't make profit. Lost. I don't know how much we lost. We had 17. We lost $6. We lost $6 on the trade. It's fine. Getting some kind of support up here. This 1 second chart. 1 second chart trying to break towards upside. Yeah, 1 second chart broke towards upside. So we're gonna do it again. Up here. Yeah, sure, why not? 100% buy long, go confirm. There we go. Now we got a long position again because this trend over here it broke towards upside. So we are playing the breakout traders, of course, and we are long in this. Weird, some altcoins pumping. Maybe altcoin season started. I don't see any altcoins pumping. I see everything in red. Everything literally in red, but it's not in red like 5% down or anything like that. It's just like 0 point something. It went into this sideways trend over here, so it got these support lines over here. There's some kind of channel over here that needs to be broken either to one side or the other side, but it does kind of a little bit weak. It can't go down to the bottom over here, so you're gonna let it go down up here. Cosmos 7% up. Yeah, okay, maybe one coin is up 7%. Like we got a FitFi up here at 3.9% up. We got a move up 5.5% up, but I don't know if that's right now or if that's through entire day and still up. What's happening with that over here? Where is the line up here? So right now we got something like this. Maybe it's gonna break towards upside. Let's see up here. Nah, it's getting rejected a little bit. Everything else down. Everything else down. Yeah, everything else is down, but it's not down a lot. It's down like 0 point something, right? It's down 0.2, 0.5, 1%. It's not down by a lot, so it's still doing the same thing that Bitcoin is doing over here. It's just ranging inside the this triangle up here, right? It's just ranging inside the triangle up here, and nobody knows what's gonna happen, right? But the volatility definitely kicked in up here. Let's see what people are saying on Twitter right now. Latest. Key overnight interest rate by 525. Let me just reload this. Finish the bank hikes 0.25%. Break news spread of the rise of interest rate. Fomc interest rate. Wait for commodity. Modus interest rate up here. Breaking the federalized benchmark. Now everybody's saying the same thing over and over again. There are no charts. Do I see any kind of charts? I don't see any kind of charts. Let's see Fomc charts. Better sign of 4 hour visible, waiting for the candle below. There we go. Alts are moving. Are alts moving? I don't see alts moving. Still, on my I mean, I see some alts are getting a little bit 0.13 or something like that. 0.13 or something like that. We are actually up 3%, guys. 3% up on Bitcoin move. Is this gonna, they try to push it down right now. We're trying to recover a little bit up here. There is still big fight between, the bulls and the bears, because they tried to dump it up here immediately. They failed and it went up, then it pulled back down. This is actually quite bullish. I think it can actually break towards upside. I think we are on the right side of the trade. I think we are on the right side of the trade over here. So we're gonna see how this actually plays out. But still the resistance still needs to be broken. But you can see here it started going on the downside over here, right? It started going on the downside with this week towards downside, so they started dumping immediately. But since there was too much bullishness in the chart, it picked up immediately towards upside, and they continued dumping the price, and then it came down here and they couldn't dump it anymore. Right now it's climbing towards upside, so there is still fight to break out of this triangle up here. The 5-minute triangle needs to break out, and only after a breakout, legit breakout, not fake breakout, but close breakout above it, I think we're gonna see some kind of moves towards upside, downside. But right now it's still fighting is going on. Unfortunately, we did our part. Check S&P. Yeah, let's check out S&P right now. How's the S&P doing? Big moves towards upside. You can see up here the same thing happened on S&P 500 up here. Move towards downside first because they're trying to dump it immediately towards upside. Right now it's getting back above the resistance up here. There's also resistance over here that we are trying trying to break up here. It's nothing is done. I mean, this can definitely drop right back down again, because you gotta understand there is a lot of you know, bears and market manipulators that want this bullish news to go towards downside, but it's really hard. I think it's really hard. So we're gonna see what's actually gonna happen up here. Where is the Bitcoin chart up here? So we got a bullish engulfing candle on 5-minute time frame, which is actually quite nice. So bulls are technically, I think they're a little bit in control, but you know, nothing is decisive just yet. I mean, there's a huge amount you know, volume up here kicking in. You know, they're still fighting to get out of the triangle to both sides. Let's see what's happening with DXY right now. DXY dumping big time. You can see up here the DXY started going towards upside up here, and right now it's, you know, failing towards downside. Let's go to 5-minute chart up here, but still holding the support. So nothing is given just yet. It did nice move towards upside up here. Let's see on 1 minute. Oh my god, 1 hourly time frame. It has this big week on the upside. 20 moving average, 200 moving average, 10 moving average. Right now it's closing down below everything right now. But you know, it's still 49 minutes left. So you know, these are the big time frames. So you know, it can take a little while before they are actually done. Over here, it's still holding the support up here. So I'm guessing Bitcoin should pull back a little bit over here, maybe right now. So we're gonna see, but I like that we are on the upper side of the triangle more than we are on the bottom side triangle right now. They tried to get up out of the triangle. They kind of failed that again, but you know, they're still holding certain levels up here. This 1 minute time frame. Let's go to 1 second time frame up here to see what's actually happening up here. So we went into this move towards upside over here, broke the trend. Right now there is some kind of a channel over here happening. Let's see if you can get out of the channel. Confirmed pump. The pump is not confirmed yet. I don't see S&P 500 bumping just yet. Nasdaq is up 0.36%. Nasdaq is up 0.36%. Nasdaq is actually pumping big time up here towards upside, which is very good. This is on 1 hourly time frame. 4 hourly time frame also pumped on the 10-20 moving average. You can see this very nice channel when it comes to Nasdaq up here. It's still pumping up on here. I mean, this is not given just yet, but you know, it is, you know, nice indication that this can actually continue in the right direction. So we're gonna see that. We're getting doji here at the top, so we're gonna see what's happening. Now let's zoom in a little bit on the 1 second chart and see how this channel is playing out. Yeah, we are breaking above the channel. Very nice. Can we hold above the channel? Can we hold above channel? You can understand that, you know, doesn't matter what kind of time frame you're looking at, whether that's 1 second, 1 minute, 1 hour, 1 day chart. The patterns work on all time frames, guys. The patterns work on all time frames. Just how it works. The golden age is up on us. Congrats to all the longs. S&P 420 end of the week. I don't know if it's gonna be 420 or whatnot, but you know, there is also right now breaking a little bit towards that. So it looks like it's gonna go back inside the channel if you cannot bounce off of this level over here. It looks a little bit, you know, skanky to say the least. So it needs to bounce back above the line up here. You can see up here that you know, it's you know, trying up here and it went below it up here, but it's not dropping below the support level. So yeah, until it drops to the support level there, you know, it's still okay. And there we go, we are below support levels. I think it's gonna going back inside this channel over here, so it might go all the way down to the bottom up here, but still this, you know, it just barely. I mean, these lines are not very precise, so we just might be, but you can see up here we broke that support level. Right now we moving down, so there is the support line up here and this channel up here again. So this looks like it might go down, but the price is actually holding quite nicely. It doesn't want to dump. I think this is actually bullish. Even on 1 second chart, you know, you would often see, you know, cascading towards downside towards the next support line, but it just kind of hugging this move on the downside, which is actually quite nice. It is definitely trying. The bulls are definitely trying. Congrats, bulls. You're doing well. You're doing good job. You're trying to hold the price, you know, up there. You know, you see down here, it is back inside the channel over here, wherever the channel is. Maybe the channel goes someplace down here. Maybe I, you know, drew the channel a little bit, you know, differently, because these lines are. We can try. No, I need these other lines. Let's go a little bit back on time up here. Just clear the lines. And let's go back to 1 second chart up here. Yeah, you saw that over here. I mean, they're definitely trying to keep the, you know, the levels up here. They try to push up here, you know, again, some kind of triple top up here, probably some kind of head and shoulders pattern on 1 second chart right now. It went down, you know, and right now again back down to the support level, whatever the support level is. And right now it's bouncing back up here. So there is a new channel up here on the small time frames over here. But unfortunately this channel is losing a little bit steam towards the downside. Let's go, you know, let's go back on you know, on the bigger time frames up here, 5 minute time frame, see how this is gonna play out. Nah, it is kind of losing a little bit steam. It tried, you know, several times. We got a 3 weeks up here, 1, 2, 3, and this is almost 4 weeks. But even the 4th week didn't came up enough. 18 seconds left. As long as we keep above the moving averages up here, above the support, I think that's going to be fine up here. 13 seconds left. Let's see if we can hold, you know, 5-minute time frame above the support. Where is the 1-minute time frame? 1-minute time frame is just up here, 20 moving average, maybe a little bit higher than that. Maybe it can do that. 3 seconds left. 1, 2, 1. Yeah, it did hold well above the moving averages on 1-minute chart. It is hold above the moving averages on 5-minute time frame. So there is definitely, you know, bulls are definitely doing something. I don't know what, but you know, maybe they can do a little bit better than this up here. So the channel up here right now got broke towards downside up here. I hope it understands what more ADA. This means it wants to go higher. I don't know, but you know, you see these moves where it goes down to support, whatever the support is, right? Support, right? And it goes up and it falls down and goes support. They manage to break the support from time to time, but every time they break the support, it doesn't just, you know, cascading towards downside, which is a very good news. Because oftentimes if you see you know, support losing the steam, getting rejected and start losing more and more levels, oftentimes, you know, bulls kind of, you know, lose a little bit, you know, enthusiasm and just let it cascade towards downside. You get some kind of bottom and then, you know, the bulls can take over, right? But right now they're definitely fighting. I mean, you know, the price is going slowly up and down and it's still inside this 5-minute you know, triangle up here. Nothing has changed. I mean, yes, we are pushing it right now down towards downside. And our trade is right now still in profit, but you know, I'm a little bit unsure whether whether we should take profits or not. I mean, there are technically no profits. 1.66 bucks, guys. There are no profits. So we're gonna let it go. We chose our direction. We chose our destiny. We gotta see how this plays out. The speech will determine the short-term trend. Yeah. So maybe just waiting for the speech. That means that we gotta wait another 14 minutes left. 14 minutes left of this, you know, sideways trading until something happens. So, you know, take profits. But yeah, it failed up here, it failed up here, it's failing up here, but it's not dumping down. But we could go down over here and then, you know, what's going to happen? Let's see up here, 1 second chart. It is losing steam, but you know, I'm not taking profits on this waterfall move towards downside. I'm not taking profits on the waterfall move. Because this move up here, you can see up here, you know, it's waterfall move towards downside. So you're gonna see how much this waterfall move towards downside you can actually put. This can actually go quite fast. 200% moving. Okay, we are in loss right now. Speech will be hawkish after 0.25. You better position on the other side. I'm a little bit unsure about that. Too many people are bearish. Too many people will think this is still bear market. Too many people think that that we need to go down to 20k, 15k, 10k, whatever, right? Too many people want to buy lower, and I don't think you know, I don't think the market is gonna give them a chance to buy lower. I don't think so. I think the market is you know, the market is not gonna give them a chance. But you know, 0.25 is, you know, expected. But take another one when we break the low we made 17 minutes ago. 17 minutes ago. Up here, down here, low. It's still, you know, we still got a higher high up here. I mean, you know, technically higher high. And we are still holding the support level up here. But, you know, and this went, you know, way too fast to the 200 moving average. Still keeping about 200 moving average on 5-minute time frame up here. 1 second time frame, you can see up here right now. There is a trend, definitely very clear trend up here. Go something like this up here. There is one line. There are a couple of lines up here. So this trend over here got broken. We need to get about both of these lines up here for move towards the upside up here. So we're gonna see if this line can actually hold. Still holding a little bit up here. They're trying to push the price down. And this curvature up here, but you know, it's curvature hitting the support line up here. You can see up here how nicely we're bouncing off the support line. It's very good. And watching the RSI, MACD and stuff like that on this kind of 1 second chart, it's kind of not that very useful. 200 moving average up here, getting above 200 moving average. The bulls coming in with the money. The bulls coming. Who opened their, you know, cold vault up here, guys? That's very nice. So, you know, we are making some kind of moves. We broke the, you know, this downtrend over here got broke towards upside a little bit right now. I think bulls are taking a little bit control because the bears managed to push the price down to, you know, 23k, exactly 23k. Look at here, guys. Look at here. Exactly 23k. They managed to push the price 23.0.2. Wait, down there. 23.001 on Binance. Exactly at 23.01, and that's when actually bulls took over right now. This looks like a rising wedge, something like that. Look how nicely it follows these moving averages and climbing on these moving averages. But there is line right up here that needs to be broken for us to, you know, gain momentum towards the upside. But it's kind of losing a little bit. Let's see up here. You can bounce off the 50 moving average above the line. No stretch soundtrack for background. Yeah, I don't have anything. You know what we can play? We can play the previous song up here. And we're just gonna put this down a little bit. There we go. We can play more of this. This is okay. I don't get copyright strikes with this. I told you my range is. What? What do you want to hear? Funeral music? There we go. A little bit nice, you know, background music. It's fine. Some Bach maybe Roland. Speech really hawkish. You better position it on the side. That means maybe he wants to go higher. 70 minutes. While this is happening and nothing is, you know, we are just going kind of sideways up here right now, just waiting for these. We are just waiting for this Fed meeting. What's the Fed meeting? Fed Conference. Conference. This one. There we go. We got a Fed, you know, live up here. In 10 minutes, we're gonna start the stream up here, and then we're gonna listen to what he has to say. Pump time. There we go. We are pumping up a little bit up here. Did we break the? Nah. This line up here never got broken. It got actually rejected towards downside right now. There are definitely some kind of. You can see up here. There's this high up here, and then we got a lows triangle. Going some kind of what are you gonna say? This is some kind of a rising, you know, a rising triangle. I don't believe in rising triangles, you know, ascending triangles and descending triangles. It's either a channel, or it's either a channel. Yeah, it might be a channel up here. Give or take. It's either I don't believe in these ascending, you know, triangles or descending triangles. I believe in channels and symmetrical, you know, triangles. But horizontal support and resistance line was. Are we in a long? Yeah, we are in a long, so we are waiting about 9 minutes. Should we get up and down even the talking starts in 9 minutes? Yeah. So the big question is whether this is gonna break out. You just saw in the 5 minutes time frame we got a very nice triangle, and we are just ranging in the triangle. You know, Bitcoin is still down minus 0.33%. It's been down minus 0.30% entire day, and it's still down, you know, 0.33%. Altcoins right now are still a little bit up, a little bit in red. Some altcoins actually managed to do nice moves. Let's see up here are 5 minute time frame, Atom, but this is not right now. This is over a long period of time. That actually managed to move. Now everything is still, you know, waiting for next Bitcoin move up here. Everything is still waiting for the Bitcoin move. Let's go to 1 second chart because, you know, trading. So might be some kind of, you know, some kind of option. Now if this channel breaks towards the upside, you know, that's very, very bullish, you know, but if it breaks on the downside, we might expect some kind of lower lows over here, right? What is the moon telling us today? The moon is coming up on the 5th of February, so we got 4 days until the full moon, guys. That's also one thing that I've been thinking lately. The full moon is coming in 5 days. You know, we cannot miss the full moon, guys. We cannot, you know, not trust the full moon. So the full moon is kicking in 5 days, and doing this curvature move up here, double bottom broke that. Maybe some kind of, you know, falling wedge up here. Render is still pumping. Nope, broke that towards the downside. Maybe it's a channel over here. Yeah, might be a channel. It's always some kind of channel or some kind of something, some other thing. Yeah, we broke the bigger channel towards the downside. We broke all of the, you know, lines towards the downside. Let's just remove the lines up here a little bit. Go to 5 minutes up here. See what's happening on 5 minutes. A little bit big time frame, breaking through the support lines down here, but the volume is going a little bit towards the downside up here. So that definitely pushing is still towards the downside up here, and support is breaking as well on the downside. Will Smith like that button. That's the first time I hear something like that, man. Will Smith like that button. Let's go a little bit higher time frames. 10 minutes up here, closing in 5 minutes. The first move was actually just volatility, and right now it's up to the resistance, and right now it's trying to push it down. Big moves, but still inside the triangle, nothing has actually happened over here. But it did give us indication that, there are definitely support levels up here that needs to be broken eventually. Hello Tila, hello Kush, how you doing, man? 5 minutes left. Guys, we're gonna let, I don't think, the big dump is gonna happen before he talks, so, I think we can do a 5-minute break until he comes back. Until the Fomc meeting starts. I need a 5-minute break, So we're gonna see how, I don't think we're gonna, get liquidated in the next 5 minutes. Oh, that's not a good move. That's a not good move. The Delhi can tell me something happened. Yeah, Delhi cannot. This is not a good move, guys. This is also a pattern up here. Impulsive move down, and then you got these two, these two mountains break support and it goes down. So it looks like he wants to go down to the bottom down here. Maybe still kind of trying to hold the level up here. But the volume, look at the volume. Fomc meeting, guys, Fomc meeting time. The music gotta stop, so we gotta listen to what the guy has to say. This is like, let's, can we pull this on the side up here? How much can I slow? This is good enough. And then we'll have chart on the side up here. And there we go. Now it's getting interesting.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation.
Before he starts speaking, guys, remember that a couple of weeks ago, or something like that, they changed the definition on what inflation is, right? They said that, they're not gonna use 2 years, they're gonna use 1 year. And my thinking is that they're doing that to give impression of a bullish market, right? Of no inflation. Of course, there is inflation, but they're trying to, lower the, fear. So I think this is gonna be bullish.
Responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone.
And remember what also happened when we had the change in the recession definition, right? No, 2 consecutive quarters of negative GDP or whatever, it's not a recession. That's BS. They did it on purpose to change the sentiment of the market, right?
Is sufficiently restrictive to return inflation to 2% over time.
Wow.
In addition, we are continuing the process of significantly reducing the size of our balance sheet.
Now this first move
Restoring
down.
price stability
$100
will likely
bucks.
require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
He didn't say anything yet.
The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it
Very
erodes
nice
purchasing
picture.
power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
5 minutes goes down.
We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds
There we
rate
go,
by
there we
25
go,
basis
there we
points,
go.
bringing the target range to 4.5 to 4.75%.
Back inside the triangle. Fake out
And we are
towards the
continuing the
downside.
process of
No.
significantly reducing
Get
the
in,
size
get
of
in.
our balance sheet. With today's action, we have raised interest rates
Oh,
by
man.
4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation,
Why is he
the committee
shaking, guys?
decided
Look
to
here.
raise interest
He's
rates
shaking.
by 25 basis points today, continuing the step down from last year's rapid pace of increases.
He's literally shaking.
Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be
Why is he
required
shaking?
to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply.
He's 80.
Our overarching focus is using our tools to bring inflation back down to our 2%
And
goal
we are here because of them.
and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market
Oh,
conditions.
that's bad.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions
look at the green candle of
strongly
5-minute
against
time frame, guys.
prematurely loosening policy. We will stay
The Bears
course
did what
until
they
the
could do.
job is
They're done. The Bears are done, guys. The
To
Bears are done.
conclude, we understand that our actions
Back in
affect
the triangle.
communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve
He's
our
on my
maximum
hot
employment and
cough.
price stability goals. Thank you, and I look forward to your questions.
Oh, questions. Interesting. Look at that green candle, guys. Look at the beautiful
Chris
green
Rickenberg,
candle. To the resistance
Associated
again. Can we
Press,
break the
thank you for
resistance
doing
right
this.
now?
As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have
6K,
tightened
2 months.
very significantly over the past year. I would
That's
say
high.
that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Did we fail again 5-minute time frame? Yeah, on the dollar.
Hi,
Look
Chair
here.
Powell. Thank you for taking
Look
our
here.
questions. Rachel Siegel from the Washington
On the
Post.
dollar.
Over the
Fail,
last
fail,
quarter,
fail.
We've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the
Nice. Breaking it.
disinflation that we have seen so far
Breaking it, guys.
has
Breaking
not
it.
come at the expense of a weaker labor market. But I would also say that disinflationary
big one,
process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services.
He's very bullish, but the problem is the inflation is not coming down, guys.
Shortages have been abated. So you see that in the
He's trying to pump the market.
In the housing services sector, we expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Has your
So he's bullish.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary
Bullish.
process
Look
now
at it.
getting underway.
It's breaking
And we
resistance
continue to
towards
get
upside,
strong
upward
labor
trend
market
line.
data. So,
Nice.
but you know, we'll update those forecasts in March.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning.
You've been long on it for a long time now.
That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be headed?
Time to squeeze shorts.
So you're right about the data, of course. What we've seen
again?
average hourly earnings
Okay.
and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation.
Yeah, from 16K.
Quits are still at an
Wow,
elevated
the move.
level. So by many indicators, the job market is still very strong.
Go to Colby and then Howard. Thank you. Colby Smith with the
Look at
Financial
gap
Times.
over here. Look at the
given
gap.
The economic data
Bullish
since
gap.
The December meeting, is the trajectory for the Fed funds rate in the most recent SEP
Volatility right
still
now.
the best guidepost
What did he just say?
for the policy path forward, or does ongoing now mean more than 2 rate rises now?
It's at 50.
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%.
Nice holding.
We think we've covered a lot of ground,
Nice.
and financial conditions have certainly tightened.
Bullish.
And I would
Still
say
bullish.
we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk
22-3.
between those two options of, the likelihood of maybe falling short of that or going beyond that level?
Yeah, a lot of altcoins are turning
I
green
guess
right
I would
now.
say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in. And now you really do worry about expectations getting
1 hour looks
unanchored
great.
and that kind of thing. This is a
4 hour,
very
they need to get above.
difficult risk to manage.
Where is the
Whereas,
resistance 4 hourly?
of course,
50
we,
up
we
here.
have no incentive and no desire to over tighten, but
These lines.
if we feel
If
like
we get
we've gone
above
too
up
far,
there,
we
I think we're good.
Could certain and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although you don't.
15
actually
minutes
see
left for
disinflation
closes
yet
on the
in
4 hour
housing
and 1 hour.
services, but it's in the
Wow.
pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature. It would be very premature to declare victory or to think that we've really got this. We need to see. Our goal, of course, is to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process begin.
But bulls have
in that sector.
the
But
bulls
so far
have
we don't
balls
see
as
that.
well.
And I think until we do, we see ourselves as having a lot of work left to do.
A lot of
Howard
work
Schneider
left to do.
Reuters, and
I don't know
thanks
about
as
that.
usual. So I just wanted to connect a couple dots here. The statement made a number of changes.
Yeah, dollar
that
dumped.
seem to be saying things are getting better. You're saying inflation has eased.
Wow,
That's
look at
new.
the dollar, guys.
You've
Look at
taken
the
out
dollar.
References to the war in Ukraine has caused
ESP
price
500
increases.
blew
You've
through
taken
the
out
roof.
references to the pandemic. You've eliminated
Rising
all
wedge
the
breaking
reasons
towards
that you said
upside.
prices were being driven higher. Yet that's not mapping to any change in
Wow,
how you
the
describe
moves, the
policy. We
moves.
still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far.
Time
Goods
to
prices is a
believe.
big sector. This is what we thought would happen. since
Very
the very
nice
beginning.
recovery.
Now
After they
it
pushed
is
the price down,
actually
very nice
happening,
recovery,
and for the
very
reasons
bullish
we thought,
recovery. Back to the
it's
tops up
supply
here,
chains,
and then
it's
breaking that
shortages,
towards upside as
and
well.
it's demand revolving.
See,
back
it is
towards
going,
services. So
curving to
this is a
the
good
right,
thing.
but
This is a good
it's
thing.
okay.
But that's around a quarter of the PCE price index.
He's very bullish.
PCE
I like
price
him.
index.
I like the guy.
So the second sector.
Once in my
is-
life, I
is
like the
housing
guy.
Services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then
Look at
come
it, guys.
down,
Look at it. Above all the lines.
assuming that new
23.3.
leases continue
Up here
to
it was
be
23.36.
soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline.
Let's look at a
for
5-second chart,
two
because this
sectors
goes
that
too
amount to a
fast.
little
I need
less
to,
than
move
half.
the
So
chart all the
this
time.
is good, and we note that when we say inflation is coming down. This is good. We expect to see
Deflation period
that
started.
disinflation process will be seen, we hope soon, in the core goods.
Yeah, he's very bullish. That's why they have
ex-housing-
changed the,
sorry, core services
the
ex-housing sector that I
this
talked
month will
about.
destroy bears.
We don't see it yet.
Definitely.
It's
That's why they
it's
changed
7 or 8
the
different
definition of
kinds
inflation, guys,
services,
because they
not
wanna
all
be
of them
bullish.
Are the same, and we
They
have a
want
sense
markets
of
to
what's
go
going
up.
on in each of those different subsections. Probably
12 minutes
the
left.
biggest part of it, probably 60%
See,
of
did you-
that is research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not going to be important.
We all
Many
here
other
right now are going
factors
to
will
get
drive
rich,
it. In
bro.
any case,
Blue
we
balls,
don't see
anecdotal
disinflation
Smith.
in that
Blue
sector
balls.
yet. And I think we need to see that.
Look at the
It's
recovery above the
majority
moving
of the core
averages.
PCE index, which is the thing that we think is the
Come
best
on, hold it,
predictor
hold it.
of
Goddamn.
headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent, we'll see more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Nick Timmeros, The Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above-target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over last year,
23,
why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive.
Couple of
And
more
why
rate
do we think
hikes.
that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long
today's
and variable
recession.
lags, and we're thinking about that. The
Nothing
story
is
we're
done,
telling
man.
about
This can dump
inflation is,
on a
to
second
ourselves,
chart, like
and the way we
bam.
understand it is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right
done.
by an appropriate
No, 10 minutes
set of
left, man.
measures are
10 minutes
positive
left.
across the yield curve. I think policy is restrictive. We're
Then we
trying
get
to
a
make
4-hourly
a
close,
fine
1-hourly
judgment
close. We
about
get these big
how much is
closes.
restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time
Oh,
talking
look at a
about
bullish
the
move up
path
here.
ahead
Let's get above the
and,
upper line.
and the state of the economy. And I wouldn't want to start to describe all the details there, but that was the sense of the
Nah, it
discussion.
cannot-
Was
there we
really
go.
talking quite a bit
Bullish,
about the path
bullish, still bullish.
forward.
The trigger man. You're making money, but yeah, we're making money. Today we're
Hi,
making
Chair.
money.
I wanted to ask about the debt ceiling.
Evening, Edward.
Given that we've
How you
now
doing,
hit
man?
up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent?
Yeah, be
or will it
more.
do its
Definitely better
own
than bear.
analysis of any legal constraints?
So your question is, would we say your question again?
Money.
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the
23-4.
debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy.
Look at the
from
gap. Did you see the
consequences of
gap?
failing to act in a timely manner. In terms
Did
of
you
our
see the bullish
relationship with
gap?
Treasury, we are their fiscal agent, and I'm just going to leave it
What
at
are
that.
we trading? We are in Bitcoin. We just
Actively
Bitcoin,
doing
just for
any
fun.
planning of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there
7
are
minutes
discussions
left.
happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Gina and then Steve. Gina Smiley from
It's
the
the
New York
formal
Times.
life.
Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from
Do you
the
guys
Federal
understand
Reserve
how
Bank of
much
Dallas
we're gonna pump
suggested
if we
that
break
was a possibility
25K?
in a recent speech,
I hate formal
and I wonder if
position
that view is
exploding.
broadly shared in the
Nice.
committee.
6% my trend in
So,
Bitcoin. I'm happy. Nice. I want to believe.
The committee, obviously, did not see this as a time to pause. We judged that the appropriate
Very interesting
thing
for
to do
next
at this
level.
meeting was to raise the federal funds rate by 25 basis
We are
points.
very, very
and
close
said
to
that we continue
23.5.
to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting?
I mean, this move up here, it
go
was
a
going
little
up
bit
with the
more
volume
slowly,
up here,
take some
see?
gaps in between moves.
I mean, I think
100
is
bucks
not
in 3 in
something that the
total.
committee is
Times
thinking
3 in
about or
total.
exploring
100x
in any
live.
kind of detail.
Dude.
In principle, though,
2x
you know,
again,
we used
nice.
to, the thing we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and I mean, you saw what the Bank of Canada did, and you know, they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Usually Bitcoin drops right after the meeting. Be careful. Thanks for a heads up. We
Steve
might close our
Leisman, CNBC.
positions.
Mr. Chairman,
20% is
the
20%.
has
We don't
the,
care.
PCE inflation rate in 2023 at 3.1%.
20%.
Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for
Very
this year.
probably bullish.
I'm wondering if you've considered the idea of whether or not
The-
your understanding
the
of the
volatility kinda
inflation
stopped a little
dynamic
bit up
may
here. I don't know
be
why.
wrong, and it's possible to achieve these things without raising rates that high.
Maybe it's the
and
top.
also
Maybe it's the top,
without,
guys. Hitting the resistance,
without
hard to
the
break
surge
through.
in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may have been responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast.
4 minutes left. Spy at resistance.
You're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative
this hit
readings
resistance,
from
yeah.
goods inflation. Most forecasters would think that the significantly negative readings will be transitory.
Look at it. It go down.
And that goods
It needs
inflation
to-
will
needs
move
to do
up
something fast
fairly
up here.
soon, back up to
We
its
might take
longer
profits
run
on
trend
Bitcoin,
of
though.
something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing
expecting this
services,
up here.
as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services.
Let me just
is
put
big
a stop
sector
loss
that's
up
really
here.
not driven by labor markets, wages. So that's why
Just
I
so
said
we
there
don't,
are a number of things that will affect.
The worst thing you can have right now is going down and
clearly
losing
labor's
money, right?
important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that
Okay,
you're
stop
not
loss
going to
at
have
entry.
a,
So if you
know,
go
a
down, we don't lose
sustainable
anything,
return
right?
to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment.
There we
your
go. We need to
question.
break. If we're gonna go higher, we
I
need
do
to break
think,
this line over here.
There are a number of dimensions through which the labor market.
This
can
is very,
soften.
very crucial right
And,
now. This
so
is
far
a fake out right
we've
now,
got,
and right
as I
now it
mentioned,
needs
in
to
goods,
break
we
up
have
here.
inflation
But we are
moving down
failing that.
without the softening in the
2
labor
times
market.
failing.
I
Go
think
down
most
below the
forecasters
support.
would say that. That
If you go back
unemployment will
below
probably
over
rise a
here,
bit from
then it's,
here, but
even more
I
towards
still think,
downside.
I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we
got 1 minute left, guys.
originally
1
got
minute
was
left,
very
and we are
much a
above all
collision
lines.
between very strong demand and hard supply constraints. Not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services
Small
sector
100x loan
soon
couple
enough.
minutes ago,
But I
8%.
think
Nice, very
there's
nice.
ongoing disinflation, and we don't yet see we don't yet see weakening in the labor market, so we'll have to see.
Can we get there with 5%?
We're getting into the box
Certainly
up here.
possible. Yeah, absolutely, it's possible. It's a question. No one really knows. I think it's because this is
Box below the
this is
support.
not like the other.
Oh, this
business
is very
cycles
bullish,
in
guys.
so
This is gonna
many ways.
explode.
It may well be.
This is gonna explode
that
towards upside,
as-
guys. Look now. This is
as-
gonna
that it
explode.
will take
Remember the
more
pattern, guys.
slowly
Remember the
than we
pattern. This is
expect,
gonna
and I
explode.
expect to get inflation down to 2%. But
I get
don't-
bragging rights if
that's not
this
my base
explodes,
case.
right?
My
I
base
get
case
bragging
is
rights, right?
That the economy can.
I get bragging rights, right?
2% inflation without a really
Remember the
significant
pattern. Remember the
downturn or
pattern.
a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a
Told ya.
chance of it.
Told ya. Remember the pattern.
Michael McKee from Bloomberg TV and Radio.
This is
I'd
a
like to
bullish
pick up on,
bullish shoe
what
pattern.
you
It
were
didn't
just
go
saying
all the way
about
down.
a
It came up here.
substantial downturn
We
and
saw
as
it.
with,
Bullish shoe
the
pattern.
full weight of your tightening not in place yet, and
4 hourly close, guys. 4 hourly
the progress
close.
against
We
inflation.
can remove the
Still
lines.
A lot of talk about very, very slow growth going forward in 2023.
We don't see
And
anything on this
the
chart. Let's
recession
change the chart.
indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view or
4 hourly
your more
closed
nuanced view of
above
what
20
you
moving
think
average, above the resistance, all of the
to,
resistance. We
economic
closed above
growth
everything.
is going forward.
It's
and
the
whether
same
you're
pattern like down
very
here.
close to, perhaps
Same
slipping
pattern over
into
here.
the wrong place, which
Can we
calls for
expect
more
huge,
restraint on your part.
gigantic pump towards upside,
I
guys?
do think
Most thousand exit profit on
forecasts
Bitcoin.
and
Nice.
My own assessment would be that growth
Insane,
will
man,
continue.
insane.
Positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that
You nailed the pattern.
the
There you
global
go.
picture
We know
is,
our patterns. We know
is
our
improving
patterns.
a bit, and that will matter for us potentially. The labor market remains very, very strong, and
He's
that's
very bullish.
job
Like I like.
creation,
This
that's
is the first time I
wages.
like Jeremy Powell.
As inflation does,
He's
come
very
down,
bullish.
Sentiment will improve. You also, state and local governments
Enjoy
are really flush these
the
days
pumps.
with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year, and that's my base case is that there will be positive growth this year.
As soon as I write something on Twitter, and immediately we're gonna
Rich Miller from Bloomberg. First of all, how are you doing?
jinx it.
Fine, thanks. Fine.
Good.
12K lows.
I think earlier
Any altcoins you recommend longing?
You said
I don't know, man.
need to
Probably
see
anything right
substantially
now.
more
I don't know.
evidence,
Haven't looked at any kind of altcoins
coming
right now.
down. Can you give us some idea of what you're thinking of? You
Coming back.
mentioned 3 months. That we've
It's a
seen
5-second
3 months
chart,
in
so
a row.
it
Governor
plays
Waller
up pretty fast.
suggested
We're
he
gonna
might
crash
wanna
now.
see 6 months.
We
Is it just the inflation
could
data, or
do
you
that,
have to
but
see
see up here that we are
the
curving
labor
up here a
market
little
coming
bit,
back into better balance to have that substantially more
But,
evidence.
So
metric.
I don't think there's going to be a light switch flipped or anything like that. I think
Broke
it's just an
that.
accumulation of evidence. So of course
Support
we'll be
there.
looking by the time
Looks like it
of
wants to
the
break
March
down,
meeting.
though.
We'll have 2 more employment reports,
20
2 more
moving average up
CPI
here.
reports, and we'll be looking at those carefully as all of us will, and we'll be asking ourselves, what are they telling us?
Yeah, this is
And-
the pattern.
and,
So break
soon
up,
after
bullish
that, we'll
break
have
down,
another,
move down, then up.
wage report, which, as you know, is a report that we like because it adjusts for
Already played Dodge
composition.
Daddy,
It's very
unfortunately,
complete.
at the start.
And the one we got, I guess it was yesterday, was constructive. It's
Yeah.
it shows
Dodge
wages coming
played
down,
out
but
nicely.
still at
It's
at
still
a
gonna
high
play
level.
out.
They're
It's
still
it's
at
in the
a
start,
level
I think.
that's
I don't know.
Way above, well above where they were
5-5
before the
with weekly close. I'm no longer bearish.
before the pandemic.
S&P.
So I don't want to put a number on it in terms of months, but as
S&P
the
pumping more.
accumulated
Came up
evidence
here
comes
towards a
in,
pullback,
it's gonna be
right back up
reflected in
again.
our assessment of the
It's
outlook,
5-second charts,
and that
guys.
will
It's
be- that will be
5-second charts. We are
reflected in
looking
our
at
policy
5-second
over
charts.
time.
Remember that.
But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. We're not Market
this
participants have a
one better.
very different job. And it's a fine job. It's a great job. I did that job for years. But in one
S&P
form or
bull
another.
market. S&P
But,
bull market.
You know, we had to do
Jim
it.
Cramer was
And
right,
so
guys. Jim
we are
Cramer was right.
Strongly resolved
The bull
that
market.
we will, you know, complete this task because we think it
Since
has
those
benefits that
mentioned
will
double bottom line
you know,
about this
support
resistance.
economic activity and benefit.
Yeah, there
the
are a lot
public
of good.
for
There
many,
is
many
definitely a lot of good, stuff that can pump.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. You know, so we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would
It's
say
coming down
this is-
pretty
this
fast,
is
guys.
not a standard business cycle where you can look at the last.
Norway just increased,
10
food
times
prices
there
by
was a
10%,
pandemic and
but
we
it's
shut
coming down
the economy
fast.
down. And Congress did what it did, and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down. And, you know, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, you know, sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation, but
We are now
that's
in
great,
disinflation,
but
guys.
we just see that it has to spread through the
How
economy.
can we
and
not
it's
be
gonna take some
bullish?
time, that's all.
How long do you see then the federal funds rate remaining at this elevated level?
You know, so again,
I like when he's like
my
that. Yeah,
forte-
exactly.
My colleagues, as you will see from the SEP, and I mean, there are many different
CPR still needs
forecasts,
to be
but
hit
generally, it's a
And
forecast of
CPR,
slower
I don't
growth,
like that indicator,
some
man.
softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year.
It's
to
hitting the
loosen policy
resistance,
this
cannot
year.
break yet.
Of course, other people
Might
have
take a little bit
forecasts
while. We can
with-
see the
with
triangle
inflation
up
coming
here.
down much faster. That's a different thing. You know, if that happens, if inflation comes down much faster, you know, then we'll be seeing that. And,
The,
and it
vol-
will be
the
incorporated
volume
into our
went down,
thinking
guys. The
about
volume went down.
Simon.
The volume went down. Right now, but it's consolidation
Chair Powell,
period
Simon
over
Riddick
here,
with
so
The Economist.
it's consolidation
I'm gonna
period
ask
over
a
here, so
further
it's
question with
very normal
language
for
around
volume to go
ongoing
down.
Increases. That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger
Hawkish.
part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued
I have to Egypt because I
subdued
worked.
growth, some softening in the labor market, but not a recession. And we have inflation moving down, into the somewhere in the mid threes or maybe lower
50%.
than that this year. We'll update that in March, but that's what we thought in December. Markets
no,
are past that.
50%.
They show inflation coming down in some cases much quicker than that. So we'll just have to see. And
Broke down a
we have
little bit, but
different
then there's
view
this
and
line up
a
here,
different
because I
view.
moved
It's a
the line
different
up here,
forecast,
so-
really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just
See,
now,
these
if
lower
we
weeks
do
are
see
always very
inflation coming
important.
down much more quickly, that'll
Back in the triangle.
play into our policy setting, of course.
Right now, because we went all the way down to the bottom, I mean, we still didn't technically go out
Chair
of
Powell,
it.
Scott Horsley from NPR.
We still technically
One
didn't
of the
go out of
changes
it,
in
but
the
it would be
statement
nice to break this
month
towards
is
the
that The
upside.
committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we
Bullish
make of
candles.
that? Does the Federal Reserve no longer see the pandemic
S&P
as
pumping
as
again.
weighing on
Yeah,
the
S&P 1.3% up. Nasdaq
The general sense of it,
2.45.
we
Dow
understand-
Jones
I personally
0.36.
understand well that COVID is still out
DXY down almost 1%, 0.98.
there. That it's no longer playing an important role in our economy. And, you know, we've kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that, you know, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in a, you know, in the Fed's monthly or, you know, post-meeting statement as an ongoing economic risk, as opposed to, you know, a health issue.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Wanted to go back to another thing that Fed Vice Chair Lael Brainard said recently. She said she doesn't see signs of a wage price spiral.
I move my line so much, lol.
And I'm wondering if you
always
agree with
bullish.
I do. Yeah, I do.
Yeah, we always move the lines.
You don't see
if you are
that
bearish,
yet,
you're
but
gonna
the whole
move the
point
lines,
is,
make it bullish.
You know, if you, once you see
That's
it,
the best part about TI.
You have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And you know, so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, you know, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are, you know, we pick that up in conversations, and I've seen some data too that show people are, you know, gradually, they're glad that inflation's coming down. People really don't like inflation. And as
People
we see it
really
coming
don't
down,
like inflation.
That could also add a boost to economic
Yeah.
activity.
We like
You look
2%
at the
inflation
sentiment,
because, you know, you got to
surveys
spend
now,
money,
they're
but, you know,
very,
we
very
don't
low.
like 20% inflation.
3.5% unemployment and, you know, high wage increases nominally by historical standards. Why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that, you know, essentially we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief.
What does mean creating inflation?
In one way or another, it has to be. We think it's important.
Actually, we like inflation, guys. We love inflation. Do you know why we love inflation?
The risk
Because fiat is dying and Bitcoin is going up. That's why we love inflation.
Expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, you know, and I think that's very reassuring. I think, you know, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting
The
inflation
pullback
down.
was actually,
the fact
you know,
that people
expected
now
over
do
here.
generally
So we came
believe
to
that it will come down.
25,
That'll be part of
23.5,
the process of getting it down, and it's a very positive thing.
give or take.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased
Horizontal
among
support.
members, or is that still something you're concerned about? Thank you.
I would put it this way: it's something that we monitor carefully. Financial conditions
There we go.
didn't
We got a
really change
horizontal
much from
support,
the
guys,
December
no problem.
meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place, as we've discussed a couple
the
times
bull
here.
market over?
There's a difference in perspective by some market measures on how fast inflation will come down.
I don't know,
We're just
man.
going to have to see. I mean, I'm not going to.
If you ask the bears, probably is.
But our forecast is that it will.
If
take
you
some time
ask
and
the
some
bears,
patience,
the
and
bull
we'll
market
need to
never
keep rates
started.
higher for longer, but we'll see.
Go to Brendan for the last question.
Hi, Chair Powell.
Last
Brendan
question,
Peterson
guys.
with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer faster to that drop-dead debt ceiling deadline.
The
Could it play an
fastest bull
effect
market in the
as we get
history of bull
closer
markets.
to that drop-dead deadline this summer?
Look, it's very hard to think about all the different possible ramifications. And I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
There we go. That's the meeting, guys. That's the meeting. Very, very nice. I think he sounded very bullish, don't you think, guys? Our long position right now is 16% up, which is very nice. So, we're going to keep it open a little bit more, and we're going to see what's going to happen. So right now, it's going to be very interesting to see what other people are thinking about this. It's also going to be very interesting to see how, the market reacts. We're going to look at this a little bit, bigger time frames over here eventually. But first, guys, we're going to take a 5-minute break. And when we come back, we are going to, recap of what just happened and try to figure out whether this is going to continue towards upside or downside, right? We're going to figure it out. We can also talk about ANUP's, CPR lines, because they don't always get hit, guys. They don't always get hit. Remember that. But first, 5 minutes time frame, you can listen to some chill music up here in the background. There we go. And when I come back, we're going to recap what just happened. We're going to recap on what just happened. Don't dump it, before I come back. There we go, guys. The Fed rate decision is over. The Fomc conference is over. Bitcoin pumped big time. Still needs to get above this resistance line. We are back at the resistance line up here again, which is very good. We got a double bottom down here. Right now need to get above this up here. You can say this is some kind of, you know, cup and handle pattern up here, but you know, it's kind of look very, you know, sketchy, so a little bit unsure about that. It looks more like a channel or something like that over here towards the upside, to be honest with you. Looks more like a channel towards the upside. We're gonna see if you can break the resistance up here. It does look, you know, it doesn't look that weak, you know. That's the, you know, most important part. How is he bearish? I'm not bearish. Who said this? Oh, I'm bearish. Then the real pullback, it will never come. Bears still think that we're gonna have a pullback. Bears still hoping for, you know, remember when we started going up, guys? Remember when we started going up? Let's clean up the lines a little bit up here so we can see what's happening. Remember when we started going up here, guys? Bears were like, ah, it's over, it's gonna pull down. Pull down. What did we say over here? We said to everybody, guys, it's the dip, buy the dip, buy the dip. We call this move nicely towards up. So up here, we're a little bit, you know, becoming a little bit bearish over here because, you know, we broke certain resistance, but then we saw it's doing the exactly same pattern as over here, which is actually very bullish. Also, the Fomc meeting, you know, 25% was expected. They are changing the definition of inflation from data from calculating for 2 years to the 1 year, and the reason they're doing that is to give impression of bullishness, of, you know, nothing is wrong in the markets, everything is good and happy, but you know, we know it's not, right? We know it's not, everything is not good and happy, right? So we pumped or even over here towards the upside. Now it's not over yet, but it does look good. It does look good. But the problem with the bears, when we start pulling back down here, they were calling back to 18k, back to, you know, 16k down here, back to 70k, right? Remember that? Then we went up here. Right now they're calling for, you know, any kind of move back down here to 21k, you know, 20k, something like this. It's no longer, you know, they don't care about 16, 17, 18k no longer, because they know that we are very high. They just want this pullback so they can buy in. And they are not getting even this pullback up here. And if this starts going towards upside, above 24, 25k, because they think, yeah, sure, okay, maybe bulls can push to 24, 25k all the way up here, and then it's gonna pull back to, you know, our levels, then we're gonna buy, and then we're gonna moon, right? Because bears are not bears because, you know, they wanna be, you know, push the price down short. They wanna buy cheap, but you know, they're very affected by the FUD and everything else. So they missed, you know, they missed the bottom down here. They missed the, you know, the accumulation zone over here. Price started going up. They have been in denial that this is, you know, breaking the trend. When we have been saying that, you know, the trend is broken, guys. The trend is broken. They have been calling for 16, 17, 18k. That's not happening. We went even higher. They're calling for 20, 22k up here. That's not happening. And if we go up to the 25k, they're gonna be saying, this is it, guys. It's gonna get rejected big time up here. But I'm saying, and you know, I'm still sticking to my theory that we are not gonna, if we go up to 25k, of course there is a probability to get rejected, but I'm saying we are not gonna get rejected by 25k, and the reason is because if you get rejected by 25k, you know, the bears can buy, and we don't want bears to be buying. We don't want them to be buying the dips. We want them to go through the pain and wait and wait and wait, and they're gonna be looking at the price going above the 25k to 26k, and they're gonna be slightly, okay, you know what, I'm gonna buy, and it's gonna go up to 27, 28, 29, and they're gonna be like buying more and more and more, and the FOMO will kick in about around 30k, and they're gonna say, yeah, 30k is gonna get rejected, and we're gonna go 31, 32, and everybody's gonna be buying. All the bears that did not buy down here, they're gonna be buying so hard, and once they start buying so hard, then we're gonna have a pullback towards the downside, guys. Once bears buy, it's game over. Remember that. Once bears buy, it's game over. Once the last bear turns bullish, it's game over. Okay? Right now, the bears still believe that 20 to 22k is gonna happen because, you know, Sheldon is saying, you know, pull back down to 22k. Anup is saying pull back down to 22k. I don't know anybody who's not saying about the pullback down to, besides us, nobody's talking about pullback. We are even bullish after this bearish engulfing candle. Even after this bearish engulfing candle on the daily time frame up here, we became bullish. Sorry, we didn't become 100% bearish. We were like a little bit, you know, yeah, sure, it might pull down, but let's wait and see a little bit. And then we start watching the 4-hourly time frame and looking at the same kind of pattern as is happening over here. Same pattern is happening over here. There is a line up here that we haven't checked. Did we break the line up here? Let's pull it all the way up here. Now we are at resistance right now. You can see up here that we are at resistance. So if you use this stop up here and this, you know, down here, you can see up here we are hitting resistance right now. So there's still, you know, left, you know, room to, you know, get above, to become, you know, super bullish, and we can definitely still go down to 24k, you know, 20 to 22k. I'm not saying that that cannot happen. Of course, that's very likely that it can happen. But if we are gonna get the short squeeze that everybody drew, because right now the shorters still believe that we can go down. The shorters are doubling down. We went up here very fast. They are doubling down on the downside. They're doubling down up here towards downside as well. And every time it doesn't happen, they have the double down, double down, double. At one point they're gonna give up, and once they give up, the short squeeze is fulfilled. The shorter's capitulation is fulfilled, because you always have a capitulation of the longs and capitulation of the shorts. So over here we had a capitulation of the long positions, and over here what is happening right now is we are having capitulation of the short positions, and in between up here, this is accumulation zone that we said is gonna last for between 3 to 6 months, or even you know, longer than that. This lasted 140 days. That's around 6 months. This lasted 204 days. That's around 9 months or something like that, give or take. You know, we are pretty you know, on the not on the dollar, but we are, you know, pretty in the range of, you know, this accumulation zone. And right now what's happening up here is the, you know, capitulation of the shorts, but that's only gonna happen if we break 25k. If we break this this level up here on the upside, if we break the 25k up here, that's gonna be capitulation of the shorts, and the shorts you know, it's pretty much over. And once this, you know, shorters capitulation do happen, then we get a pullback and you know, consolidation and everything else what comes after that. But you cannot have big pullbacks while you are going through the capitulation of the shorts, because if you have these big pullbacks on downside, they have to, you know, they have time to close their positions, you know, with less losses, right? Because they had, you know, big losses up here, and they were hoping it's gonna be pullback so they can close down here. But you know, it went up here, so they're hoping it's gonna go down, back down to these levels, so they're gonna close the positions and maybe buy long positions up here, right? So they're always hoping, and the harder the price pulls towards upside, they miss all the moves, guys. They miss all the moves. Literally, they miss all the moves. And eventually, once we break to 25k up here, once we break 25k up here to the upside, they're gonna be crying in their beds, guys. Now, guys, I understand, you know, that there are bears that are losing money, you know. I feel sad for them. I'm not a cruel guy, you understand? But, you know, I don't like them when, when we have been going through the bear market and everybody's bearish, that's fine. You know, you're bear, I'm bear, everybody's bear. It's very just. But they don't wanna stop. They're just like, no, we're gonna go down. You cannot have, you know, we've been going through the bear market for 2 years. We gotta have a little bit of fun, right? It's been 2 weeks and they cannot give us 2 weeks. They cannot give us 2 weeks. So Bitcoin does look nice over here right now. The most bullish thing that we actually did right now is that we managed to get above, you know, major resistance level up here. All the moving averages, you know, right now pumping, continuing pumping up here. We also got the resistance up here at 23, 24k. So we're not quite there yet. but it does look very, very nice. Our long positions right now 22% up, which is very nice. So, you know, we like that. Let's tweet up here 23.5. There we go, 23.5. Just so bears don't forget. Just so bears don't forget, right? We don't want to let the bears forget that we are at 23.5. There we go. Resending, yeah. This looks very nice. The Bitcoin, you know, went through this, you know, consolidation phase up here. You can see there was a triangle up here that we fell, you know, below over here. Managed to create double bottom up here, climb to the resistance, had this, you know, spring down and blasted through that towards the upside. Very nice moves. Very, very bullish, very nice moves. Every time you break any kind of resistance, that's a bullish move. Any kind, it doesn't matter what kind of resistance, it's a bullish move. Of course, if it's a downtrending, you know, resistance line, you know, it's not as bullish as, you know, uptrending resistance line. So if you break an uptrending resistance line, you become super, super bullish. So when is that gonna happen? If you go to the daily time frame over here, no, 4-hourly time frame over here, and we are right now breaking the uptrending resistance up here. You can see uptrend resistance. You can even change that a little bit up here. You know, you can maybe use this one or these bottoms down here. But we are breaking it. What did I just say? That when you are breaking uptrending resistance, you become super bullish, guys. You become super bullish. And what are we becoming right now? Super bullish. Unfortunately, we still got 3 hours and 28 minutes left. 3 hours and 28 minutes left on the 4-hourly candle, 1-hourly candle closing in 28 minutes. But, you know, 30 minutes candle did close above that line. So, you know, some small time frames are already closing above certain levels. DXY minus 1.00%, actually exactly on the dollar, 1% towards downside. Blasted through that, through everything right now towards downside, still bleeding down. S&P 500 1.25%, still going towards upside. Let's look at a little bit bigger time frames up here. This is hugely bullish for S&P 500, guys. There has been two patterns up here. Two patterns. The one is the triangle over here, and the other one is the rising wedge. Both are right now being broken at the same time. Now we still need the daily close up here, but this is a stupidly bullish move. And if it you know, manages to hold on the retest over here somewhere tomorrow tomorrow Monday, Tuesday, if it manages to hold a retest up here, you know, this is an extremely bullish move for S&P 500 and everything else. So it does look very, very good for S&P 500. You know, breaking the rising wedge towards the upside, stupidly bullish move. Breaking this triangle up here that we drew, stupidly bullish as well. Over here on the S&P, on the Dow Jones, we are still going inside this, you know, some kind of rising wedge. So we are not quite out of that yet. We also got this resistance line right above us over here. Might be some kind of triangle up here. But I've seen these moves up here tend to break towards upside here, and then there is another move that needs to happen. But you know, we are at least not falling down over here, still bouncing off of these you know, moving averages right over here and continuing towards upside, which looks very nice. Nasdaq up here, as you can see here, there has been some kind of channel over here. We broke that towards upside. Right now we have this small channel over here, and right now we are at top of the channel. We still need to break towards upside, but we just saw what's happening with S&P 500. It does look good. Bitcoin is still pumping 2.14% up. Bears have no chance right now. They lost everything over here. And let's see up here on the 4-hourly, sorry, in small time frames, 5-minute time frames up here. Looks very, very nice. Looks very, very nice. And you can see, and right now we can, you know, even analyze, you know, what happened over here before. In the very start, let's go even to the small time frames over here, 1-minute time frame. So in very start, when we just about to get the, you know, when we at the same moment that we got the 25 interest rate, we already knew it was bullish. We already knew it was going to be 25, but we already knew that bears are going to try to exploit this towards the downside. So the bears were trying to push the price down immediately. But the next candle up here was very bullish and very good. That means that there is definitely some kind of bullishness that's going on. Then once it started going towards upside, you know, bulls were a little bit unsure because we didn't have, you know, the Fomc meeting happening or anything, and a conference happening or anything like that. So bears kind of took a little bit over and pushed down. We even went down here on our long trade, and we are sitting down in a losses down here. No, we are sitting down in losses over here. We pushed it a little bit towards downside. We did sit in some kind of losses over here, right? But this move up here, we are still in some kind of bigger triangle over here. And in this move over here, it was just waiting for the conference. You can see here exactly at 8:30. is when we started going towards downside. So bear tried to, you know, scare us into pushing the price towards downside because they, you know, everybody, you know, the 25%, you know, rate hike didn't do anything. So they tried to scare us to push the price down. They failed to do that, and we were going towards downside. I wasn't actually worried. I let my trade go. It was $100, so it wasn't big money. It, you know, when it comes to the emotional, you know, scareness and stuff like that, we don't care too much about that, right? When it's not a lot of money. And then after that, you can see this very nice bullish move towards the upside all the way up here. As soon as, you know, as soon as the you know, conference started going on and he started speaking, opening his mouth, you know, it exploded towards the upside up here, towards the resistance at 23.5. And then, of course, we got a consolidation up here, which might be actually a bull flag. Now, if this is a bull flag, guys, if this is a bull flag, let's assume this is a bull flag over here. And let's draw the bull flag up here. Yeah, this looks like a bull flag. Now, if this is the bull flag, and I'm going to say it's from the bottom to the top up here, the move, you know, we are looking at something like, you know, up here above 24K. We are going back to 24K if this is a bull flag, guys. Now, the big question is whether the bull flag starts here at the bottom over here, or the bull flag starts up here. Because if the bull flag starts up here, then the target up here is only up here where we are right now, and we are already finished with the bull flag. Oftentimes I think it's the first pullback up here that makes the bull flag. But, you know, we're going to be a little bit bullish and say 24K is the next target up here, if this is a bull flag towards the upside. And as you see, guys, you know, when it comes to, you know, Fed conference and stuff like that, the 25 rate interest hike was priced in. What wasn't priced in and what he's going to say in the conference, but we already kind of knew, and I started talking about that in the start of the conference, that they changed the definition of what inflation is just to make it, you know, look okay, just so they can go out and say we are having a deflationary period right now, and everybody is bullish. So they want markets to go up, and as long as they, you know, keep this rhetoric, you know, it's good for us. So what can you say right now? Well, we can say that Jim Cramer was right. Jim Cramer was right. Where is Jim Cramer? Jim Cramer was right. Photos, let's go to photos. There will be definitely a photo up here. Yeah, Cassandra, Michael Burry said sell. Jim Cramer says we are in a bull market, so buy the dip. So this time Jim Cramer was right. Everybody thought that Jim Cramer, all the bears were believing Jim Cramer is gonna be wrong, and this time Jim Cramer is actually right. But you know what we do? We don't care about the news. We don't care about the news. We don't read the news. We read the charts, guys. We read the charts. But Michael Burry, you know, said two things that failed. Number one, he posted a chart of market that, you know, it said maybe that, you know, we're gonna hit some kind of level and dump. He said sell, and we are still going up. So even Michael Burry with 1.3 million, you know, followers, and he's following 0 people, and everybody looks up to him. He did short, you know, the 2008 market crash, but even he gets it wrong, guys. Even he gets it wrong. So there you go. Don't believe people just because they have some kind of reputation. Don't believe people because they just have a reputation. Don't believe me just because, you know, I call, you know, a pattern or two right. So there is that. But it does look good. It does look good. Definitely looks good. We still got 3 hours and 20 minutes left. The interesting part here is gonna be, you know, whether we get to 24K. It does look like we might manage to get up here to 24K with this bull flag over here in the middle. But this is a small time frame bull flag, this you know, up here, and I'm really curious because I've seen other bull flags play out, and a lot of people will do bull flag like this over here, but then I noticed that it's the first pullback up here that gives the flag towards the upside, and right now you saw that this bull flag already came to some kind of top. So, you know, maybe this is the top 23.6 or something like that, but let's keep the bullishness until something breaks, like we said last time. Remember that we're on the daily time frame here. Let's keep the bullishness until we get get back below, back below the 10 moving average up here, right? Back below the support. And we did get up here, even though we are going towards downside, we did keep the bullishness, but we did go back below the support. We still had a higher high, so there was still some kind of hope that this is going to bounce back, and then, you go into small time frames, try to look for some kind of bullish patterns and so forth, and this did play towards the upside. And you can see up here right now, we are bouncing off of this 10 moving average, which is very, very nice. But right now saying that, yeah, this is bad, it's gonna go down, whatever. Nothing is broken, guys. Nothing is broken. It's only if we go right back down here below the support line and stuff like that, we're gonna turn bearish again. But there is no need to be bearish right now. Even though it might pull back over here, even though it might go all the way back. Until something breaks, there is no reason to be bearish. Retest and boom. I'm glad that he's inverse indicator and shorted. Yeah, I was thinking that maybe he just understood that whatever he says, the opinion, people do the other thing. Maybe he was priming us, for this tweet or for this this saying. So who knows? Altcoins are performing well. Some altcoin Matic is up 5% towards upside, bouncing big time towards upside. Phantom bounced off of the 20 moving average up here, 4% towards upside. AVAX is up 2.3%. Doge is still down 3%, but it did pump like big time over here, 16% towards upside. But this is recovering nicely off of the support lines on the downside. So altcoins are definitely bouncing right now, but then you still need to do very well. Here we have Dogecoin. No, sorry, Shiba Inu. And Shiba Inu does look, this is resistance on Shiba Inu. It broke this trend. It went into consolidation over here. This is the line. Once this line breaks out, this looks over here like a double top up here. It might do just what Bitcoin just did on a small time frames. I don't know if you remember. You can go back in the video and see that. It goes up to the resistance up here. It gets this spring towards downside and then blasts through towards the upside. It might be doing just that over here. But this looks like a nice double bottom over here. It needs to get up here above the resistance right now, where it's actually hitting it on the head. It's trying to break that line, but Shiba Inu does look indeed very, very nice over here in the line. And this is the 4-hourly time frame. If you look at on the weekly time frames, like everything looks very nice. Everything is above this 10-20 moving average up here, having this consolidation pattern here before continuing towards upside. Especially, for example, Dogecoin. Dogecoin looks extremely nice up here. You can see up here these 3 moving averages. You can see how nicely it managed to slowly climb up here bullishly towards the upside above the moving averages. So Dogecoin definitely has room for more growth towards upside. And this goes with all of the altcoins right now. Sandy's had this pullback down to the 20 moving average, bounced off the 20 moving average up here very, very nicely. This is very normal patterns. This happens all the time in some kind of moves. It goes down, follows the moving averages, get above the moving average, consolidates, and then blasts through. So what I'm looking for example on Sand over here, I'm looking for example on another move up to the 50 moving average up here. That's like 78% move. These are the kind of moves that I'm looking at for this consolidation above the 10-20 moving average up here, because I've seen these moves a lot of times. They bleed towards downside, jump on the moving averages, consolidate up here. This happens on the small time frames as well. You can look at this on a 5-minute chart. You will see that the price will have a pulse move down. It will start bleeding. Then it will jump above the moving averages, certain moving averages. It will consolidate over here, and then it will explode towards the upside, right? It is very normal pattern. It happens all the time. And this goes on for a lot of coins, if not all of the coins. You can see up here, for example, Alice up here managed to have a nice big move towards downside right now, consolidating above these moving averages up here. So these are very, very nice moves. Now if this should break on the downside down here for whatever reason, this doesn't it's not just about Alice or anything like that, but if they should break towards downside, then you have to look at these support lines on the bottom side before something gets broken. But doing this big move towards downside over here should be something that we should be very, very worried about. But we are not quite there yet. So there is no reason to be bearish. There is no reason to listen to these TA guys on YouTube, including myself, that are bears. If the YouTube guy is bull, that's fine, but if he's bear, there's no reason to listen to these guys. And right now, a lot of these, people that have been listening to Crypto Savvy, for example, that's saying, no, we're gonna go down, we have the resistance, blah blah blah. I don't think, I think Crypto Savvy is okay. I think all YouTube guys are okay. I don't agree with the TA, but there is no such thing as correct TA. Like, people do different kind of stuff, people make money, that's fine. But when your TI is not aligned with my TI, I have to say that you're wrong, because I believe so strongly that I'm right. So the other guy has to be wrong, and he's wrecking a lot of people. Unfortunately. No matter food in Norway is 10% up, TL is gonna be rich when a bull market begins. The bull market already started. People think this is the start of the bull market. So sad. People think that this is the start of the bull market. This is not the start of the bull market, guys. This is not the start of the bull market. The start of the bull market is over here, guys. This is the start of the bull market. Once the long capitulation is done, that's the start of the bull market. That is always start of the bull market. The bull market starts with accumulation zone. It goes into capitulation of the shorters. It goes into some kind of pullback. It goes consolidation and then continues up from there. Isn't this a bear market rally? No, of course not. Like, you need to stop listening to people, man. Of course it's not. Bear market rally happens like this. I'm gonna show you guys. Okay, so you got a trend line, right? And these moves towards upside, right? These moves towards upside. These are bear market rallies. But once you break the trend, this is not a bear market rally. Bear market rally are when you are trending down in some kind of downtrend, when you are a bear market, and any rally up, that's a bear market rally. But once you break out of that rally, and once you get into the accumulation zone, and you break out of the accumulation zone, calling this right now a bear market rally, for whatever reason, it just, there is no other way than saying stupid. Like, it's really hard to say that it's really hard to say that this is a bear market rally. Like, we are not in bear market. Bear market is over. People don't understand that. People have a very hard time just switching their psychology from being bearish to being bullish. They just don't believe it. That's why if you see the photo, the image, it's a disbelief face. It's a disbelief face because people have a very hard time. People have a very hard time believing that people have a very hard time believing that that we can pump. That's why they're saying disbelief. You can see up here, it says disbelief. This is a sucker's rally. People think, this is entire move. This is exactly what people are thinking. This is a sucker's rally. People think that this is unbelievable. People think that this is, oh my god, how could this happen? We've been watching this chart, the psychology of the market cycle chart, for 5 years right now. I remember in 2017, 2008, this chart comes up every single time and everybody talks about chart. Yet when we get into disbelief phase, people don't understand what phase we are, right? The panic already happened. We went down. We had this move towards downside. I thought it was gonna be a quick spring towards downside. Unfortunately, it was a very long spring towards downside. We bounced off of that. We are right now going into this disbelief rally, and every single bear thinks that, bear market bounce. It's not bear market bounce. Bear market bounces are done. I'm so excited, and you know what means when I'm excited. We're gonna dump. We're gonna dump. Most undervalued YouTube channel. Yeah, we're never gonna get big, but we are blue ball, so we don't care. We don't care. So this looks very nice, guys. This looks very nice. Above the resistance, bouncing up here towards upside. Let's see up here, will we get any kind of divergence? Yeah, there will be divergence up here when we start continue pumping, but we don't care about divergence. If we start pumping up here above 24k or something like that, people will be talking about this divergence. There will be a big divergence up here, and we might pull back down, and the divergences will keep on happening, and people won't be believing. People will still be saying, we're gonna go down to 20k. And just like Mladen said, Mladen remembers, because down here Mladen said we have a triple divergence, and we had triple divergence on the chart, yet the market pumped. The market pumped big time. Where was the triple divergence up here? I think it was on 4-hourly time frame up here somewhere. Let's see up here. It was very nice. Up here, yeah. There was a triple divergence up here on the chart. 1, 2, 3 up here, something like that, right? And we still pumped towards upside. Triple divergence up here on the chart. You see up here. This was the first, this was the second, and then when we start pumping up here, that was also the third, and it just continued pumping towards upside. Triple divergence, and it still continues pumping towards upside. So, you know, just because you have these, you know, bearish indications that, you know, price is gonna go down, like over here, if you pump right now above, you know, 24K, people will be saying, oh, there is bearish, the world is gonna pull back. It will pull back a little bit and then it'll go up, and pull back and go up. And people are like, oh, it's gonna go down to 20K again, because they wanna buy at 20. When we are 25K, they wanna buy at 23K, right? Right now they want to buy at 20, you know, because we are over here, so they want to buy down here, right? But we get to 25K, they're going to be hoping, you know, pulls back to 23K so they can buy up here. And it's not going to happen. I think it's going to explode above 20. I'm still saying it's going to explode above 25K. Once that happens, you know, the whole bear, you know, bear sentiment is going to go away. That's what I want. That was on daily. Yeah, I like you explaining your perspective. Thanks, man. I remember in 1980 this chart came up. Yeah, I'm pretty sure the chart has been around for a very long time. You should consider the late adopter comedy. Now, I'm just very excited, guys. I'm just very excited. I like that the move was towards upside. I like that it's playing like... because you gotta understand, in the previous bull market, I wasn't that... You know, I was, you know, decent on TI, but I missed a lot of stuff because I didn't understand this bullish bearish sentiment. So entire bear market over here, when we're going towards downside, you know, I learned, I tell you guys, I started doing TA up here, right? In 2017, I was doing TA up here, and then down here I started, you know, I made my YouTube channel. Even called the bottom down here at the bottom of 3K, by the way. Mladen remembers, you know. You have to cry when we get to 8K. Mladen the bear. Yeah, but you know, calling the top, I already knew, you know, I was already seeing some things that other people I haven't been seeing, and I was already, you know, looking that, you know, something is not right with how people do TA. So when I'm going up here, I got liquidated up here, so I didn't enjoy the move towards the upside, and I bought back down in here. Of course, we went through the corona dump and everything else. I never sold. We went all the way up here. I 10x on this pump up here. Of course, I lost a bunch of money on the move towards downside. I closed that. I cried myself to sleep. I didn't actually cry myself to sleep, but you know, we can say that and stuff like that. But this move towards upside, even down here when we had the gaps, guys, when we had the, you know, CME gap down here, there is a CME gap right over here. I was saying we gotta go down, we gotta go down, we gotta close the gap. The gap never closed, guys. The gap never closed. I learned so much things, guys. And in this move towards the upside up here, I missed so many opportunities because I wasn't that proficient in TA. I didn't understand the movement and stuff like that. But over here, and especially over here and then towards downside over here, and especially this move towards downside, I learned so much. I think I learned most of my, you know, TA that I applied today is in this bear market over here. I learned so much, and I understand right now that, you know, this can be applied in the other direction as well. The same thing that are happening up here in the move towards downside. Every pump gets rejected. The same thing over here, every dump gets rejected. In the strong bullish markets, every dump gets rejected. When you are bullish, every you know, dump, every dip, you know, needs to be, you know, bought and so forth. So I learned a whole bunch of TA down here. I think I learned most of, you know, what I used today over here, especially a lot, you know, a lot, you know. So you know, this bear market has been very good to me. You know, not when it comes to money, because I didn't make any money. Yeah, bull run in 8 days. Exactly. And, you know, I'm very proud of that. That was my first call. It did happen in 8 days, you know. So, yeah, calling the bull market in 8 days when everybody... Because even down here, guys, I remember it very well. Even down here, people were so bearish. People was so bearish down here. You wouldn't understand. Down here, they was so bearish. We came down to 3.2. We came down here to 3.5. I didn't understand still this, you know, capitulation and shortest capitulation phase down here. But I did know that we are very, very low. Everything points towards the upside. All indicators are on the bottom and stuff like that, right? But people are calling for 2.5, 2.4, 2K. Even JP Morgan said, based on some kind of TI, we need to go down to 1.7K. I remember that very well. JP Morgan said we need to go to 1.7, and then there have been, of course, these, you know, extreme bears that are saying something like 700 down here on the bottom. But even down here, the bears, you know, calling for these lower levels all the time. The same thing happening down here. You saw that. We need to go down to 10K. Need to go down to 10K. So, you know, understanding market psychology. Very excited. Very excited. I'm sorry, guys. I'm very excited. I hope I don't crash the market because I'm excited. But you can still pull the trigger, just like a year ago. I didn't call, like, over here, I'm very glad that we called some kind of bottom over here, right? It was accumulation zone, it went down fast. When we were over here, we said that there might be, you know, a spring towards upside. I did not expect this move up here, unfortunately. So we went up here and I was like, no, it's fine, it's gonna spring back, but when it didn't spring back for a while, I was like, yeah, man, what's happening? And then we came here and we started, you know, breaking certain bearish patterns towards upside. There is actually videos on my channel once we were down here, starting breaking certain bullish patterns towards upside. I was trying to explain to people how bullish that actually is, and this exploded towards upside up here. I didn't call it, but you know, I noticed the bullish move, and then of course the break of the trends and everything else. So very excited about you know, about prospects gonna happen. Now I don't think that this move up here is gonna go to 70k or something like that. I mean, I'm not delusional, right? There are definitely certain you know, trend lines over here that's gonna, you know, give us, you know, play for our money or whatever that's called, right? I don't know what it's going to, maybe it's going to be something like this up here, maybe up here at 25 to 6k, but I think we're going to break that, right? But there are definitely, you know, a resistance level up here that are very, very important, very hard to break. But once we get to those resistance level, I think we can do a very nice move to the resistance level and then move towards the downside a little bit up here, consolidate, and then do another move towards the upside. So we're gonna see. I like Modern's prediction up here. Copy image up here. I like Mladen's prediction up here, guys. I like Mladen's prediction very well. See here, Mladen actually found this very nice. Mladen is very good at these kind of things. This is 2017, 18, 19. We had this capitulation of 46% from this line to the bottom, and then we had a pump to the New Year's Eve. This is yearly close up here at 13,863, which is very nice find. I don't know how you found this. Very, very nice. Now there is another chart up here, copy image up here, another image over here, Mladen's image. The guy is a gem, guys. This guy finds everything. You see up here, from the bottom down here, from the last capitulation phase up here. The capitulation started all the way up here, but you know, it got everybody wrecked on the last move down here. 46% down to the bottom, and the yearly right now, if it's gonna play out like, you know, 2018-19 move up here, we are looking at some kind of 46k, guys. If we move up to 46k, do you know how wrecked the bears are gonna get? It's gonna be insane. Look, I predicted before the dump happened, but I forgot about it. Look in the group. I don't know where it is. Can you look in the group and find it? Because I can't find it. I don't know where it is. Let's see if you can find it in the group up here. Let's see up here on the side if you can photos. Like it was a long time. Do you know how many charts that are being posted up here? There is no search function or anything like that. Is there a search function up here? You see Mladen. Nah. I just need to tell a crypto tweet from about the same pattern in Fomc. Giga. Giga is the Giga the guy that's just turned 20 years old? I think so. PNL 90-day wins. Wow, this is great. Proud of my PNL strategy for future. Most important dynamic recent funds. And leverages the result of complex skills. Nice. There we go. Yeah, you did actually. 46% down in this move up here, but the move up here is not there, but the 46% move towards downside is, yeah, up here, exactly on the dollar down here. You saw that immediately. Very nice, very nice. Yeah, finding patterns and these kind of, even these kind of things, guys. I'm not really big on these kind of things, but I remember, for example, I know you guys don't like the guy, you know, Richard Hart. But Richard Hart is also analyzing the chart a little bit like this, you know. He's looking, you know, from the bottom to the top, you know, 300% down, you know, 85%, then up this much percent. And then he looks, you know, it happened like 3 times before, it's gonna happen again. So that's why Richard Hart is still calling 85% bottom to Bitcoin. And he might be right on the 85% bottom right now. I'm gonna explain to you why. Because it hasn't happened yet, right? From the top up here to the bottom down here is 77%, but the reason we can go down 85% is down here at 10k. The reason we can go down to 10k is because once this move up here happens to 46k, like Mladen thinks is gonna happen, to 46k. And once we start moving down here, we might have a big move towards downside because we don't know, you know, when is that gonna, maybe it's gonna have consolidation, and because we don't know what's gonna happen in 24, 25, maybe the world will break out, maybe something new is gonna come out. You've seen how the world is, right? But this move down here, this big spring towards downside, just like the Corona dump, can definitely happen. And then you can have this, you know, move down to 10k right now, the 10k down here. But I don't think we can move to 10k right now over here towards 10k. I don't think this is probable, right? But you know, looking at these kind of things, you know, how many percentages from down here to down here, and how much do we move from over here to over here, that might be very, very interesting, you know, things to find. I'm not really good at those kind of things, you know, I don't look at percentages and stuff like that. But I like it when I find. Mladen also found the percentages of the move on the DXY. So here is the DXY, and Mladen was one of the, you know, the found percent. Now we're looking at the chart up here. It's monthly chart. Where are the moves? Where is the line up here? Where was the line? I think the line went something like this up here, right? So this was the line, right? And what Mladen found out is that from the bottom towards the top is 27%, right? So you go from some kind of bottom down here towards the top, 26%, right? And from the bottom down here towards the top is again 28%, or 20, yeah, it depends on where you put it, 26, 27, 28%. Like, it's insane. It's insane. It's insane. Isn't it beautiful? Like, how does this happen, right? So they're nice moves, and these numbers up here, you know, 26% up, 26% down, this, that, you know, they're definitely important, guys, definitely important. But you know, I don't look at numbers, I look at lines, you know, because these numbers need, you know, if you like numbers, you know, that might, you know, make that your thing. Find the numbers on the chart, because I'm telling you guys, there are definitely numbers on the chart. By the way, is this a channel over here? Don't tell me it's a channel, man. If it's a channel, we are looking, you know, for something like 95 on the 94, 95 on the XY down here, because it broke this up here right now. You know, you can go down here something 97, 98 up here on the bottom, and then, you know, go again towards the upside, right? So we are looking at this move up here, and this move up here could go to 25, 26, right? So it could just go and bleed all the way down 24, 25 up here to some kind of bottom, right? Because the bull, if you look at up here, let's add the Bitcoin chart. Where is the Bitcoin chart up here? And let's look at a little chart up here. Let me show you something, guys. If you look at this chart over here and you add halvings on Bitcoin halvings, right? Bitcoin halving events. I think this, yeah, this is nice halving. The next halving event is gonna come in March 24. This is the halving event, right? So these are halvings, and every time after halving, you go into the, you can break this into three parts, 1, 2, 3 parts. 1, 2, 3 parts, right? 3 parts over here, give or take. So the next stop is gonna come around June 2025, all right? 2025. Now look at this, guys. Let's add DXY on the chart. DXY, DXY, new price scale up here, and we're gonna change this price scale to. We're gonna change this price scale to candles, just so we can see it better. Okay, let's remove all of that over here just for a second, and let's something like this, and we're gonna do the thing up here. So this is the line. Where is the line up here? Right, it went from the top up here. No, that was the channel. So let me draw the channel up here, because it is, and this is the channel line. Where is the channel? This is the channel up here. Let's see this, guys. See this. If it goes down here, right? Maybe down here, give or take, right? And the next halving is March 24, and we know that the top comes, you know, 1/3 in, you know, that's when the top comes in, right? 1/3 in, that's when the top comes in, right? So if we assume that 1/3 in, after the halving, 1/3 in, the top comes in, that means that over here at July 2025, that is when the top is gonna come in, right? But if you look at this, you know, move up here, and right now it's breaking this, you know, support line, half support line. You can just, you know, start, you know, going down over here towards some kind of bottom over here, maybe even break a little bit towards downside, exactly where the top is on Bitcoin next bull rally, right? It goes up here towards upside, right? And next time we get some kind of top up here, the DXY goes down and gets some kind of bottom, and then it flies towards the upside, and then we crash, of course. Huh? See that? I made this, guys. I made this. we're gonna copy this and we're gonna tweet it and we're gonna predict it for the next, you know, we're gonna you know, put it on Twitter, you know, up, so we can tell people like, told you so, you know, in 2020 July 2025. So there we go. So there we go, guys. There we go. We're gonna predict that. Now, if it plays out, we got bragging rights. If it doesn't play out, like nobody's gonna remember a tweet like, you know, 2 years ago. Nobody's gonna do that. Like, we cannot lose. We cannot lose at making these predictions. We can't lose. We can't lose at making these predictions, because if it plays out, bragging rights, because we're gonna, you know, bring up the tweet from 2 years ago and tell everybody. But if it doesn't play out, like, everybody's gonna forget about the tweet. You know, you can always delete. Yeah, you don't even have to delete. Like, nobody goes back 2 years to check your tweets. Unless you are like, you know, president or something like that. Nobody goes 2 years back to check your tweets. What did he say, you know, during the, you know, bottom of 2023? What did he say? What kind of prediction did he make? Let's get him on that. Nobody's gonna do that. Tila needs to write a book and call it the Bible too. Told ya so. Nah. We're gonna be nice with people. We're gonna be nice with people. What if you are right and forgot about tweet yourself? You guys are gonna remember. You guys are gonna be like, hey man, that tweet. You know, I remember everything. Yeah, Mladen remembers everything. So, you know, we got it covered. We got it covered. So we're gonna be fine. Bitcoin is up 2.4% up here right now. Let's remove it and let's this Bitcoin halving, so this thing up here. And let's go to 4-hourly chart. It still looks nice, still pumping towards upside. I mean, there will be divergence, guys. There will be divergence up here at the top. And people will be saying, oh, there is divergence, it needs to go down. And there might be a pullback. And the pullback might be a dip, like over here and like over here. But it does look nice. Is this a real pump? Of course it's real pump. Where have you been? Are you watching Crypto Savvy channel, man? Are you doing that? Is that why you're asking if this is a real pump? What kind of channel are you watching? Thought makes sense, so it's nice tweet anyway. I do think it makes sense. It's not something like, you know, but these kind of predictions are, what am I gonna say, like, they are fun to make, you know. It can play out, it doesn't have to play out, but, you know, if it corresponds a little bit, you know, to some kind of charts, you know, it might play out. Pacing 25k tonight, it might be that. Bears are getting wrecked. Are you still in your, yeah, we are still in the long position, so no problem there. Everything looks fine. Yeah, it's up 30% right now, so it is about where I should be taking profits, but I'm a little bit unsure about that. A little bit looking at Tino. Is Tino bullish or bearish? I don't know who Tino is. Who is Tino guy? I don't know. I don't know who Tino guy is. YouTube. I'm just gonna write, you know, Tino crypto. You know, Google probably knows crypto. Tino crypto YouTube channel. Is this the guy? 95 square. Probably not. He plays League of Legends. Traders Reality. This is Tino. Oh yeah, this is the guy. Okay, yeah. I actually watched from. I did watch before. I don't watch that much now. But you know, he talks too much about markets, about this, about that. You know, my second favorite after you. Yeah, he talks too much about, you know, everything else beside the charts. I mean, he does look at the charts a little bit as well and stuff like that, but. I'm not really a fan of his TI, that's the thing. But I was listening to him before he had a, you know, face cam, and because he has such a nice voice, and he should have just, you know, continued doing this, you know, like streams like this, you know, without any face cam and stuff like that. You know, you see, he uses, you know, stuff that I don't appreciate when it comes to TI. So, you know, I really don't care about his TI. But I was listening to him because he had some, you know, thoughts about other things. But, nah, it's not my type of channel. But is Tino bullish or bearish? That's what I want to know. Tino is Traders Reality, yeah. Yeah, was Tino bullish or bearish? Follow you, Anoop, Lifer and Sniper. You, Anoop, Lifer and Sniper. Nice. Bearish. Way is bearish. Okay. Unfortunately. But you know, guys, a lot of people that are looking at fundamentals and that are looking at the news and stuff like that, they are keeping this bearish sentiment because they're not looking at charts. If we had just been looking at news, we would probably be bearish as well. The housing market is coming down, you know, the inflation is going up, the economy is going, you know, people are going, how can markets move towards the upside? This is gonna push it down, but we are not reading the news, we are reading the charts, and as long as we read the chart, we're gonna be fine. Bullish is what bullish does. I'm glad we are sticking to the bullish sentiment. It's nice. War in Russia, yeah, like people are gonna bring everything, but you see, markets don't care whether there is war in Russia or not. Like Tino was bearish as basis as always, also a bit in disbelief tonight looking at the charts. Yeah, after the stream I'm gonna be looking at what other YouTubers have been doing while the price pumped towards the upside. I think we did well, guys. I think we did well. We chose the right direction, and that's the most important thing. Of course, we didn't catch the the bottom of the move. I mean, it's volatile. I mean, somebody might have done it, but we're not bullish. We chose the right direction. That's what matters, right? True, it depends on more factors. You will see a lot of times there will come some kind of very, very bearish news and the market will pump. This will happen. Guys, I gotta tell you something. Do not believe YouTubers and crypto YouTubers and other type of news YouTubers when price is going towards the upside. When price is going towards the upside, there will be definitely 100% bearish news. And they will use these news to tell you that the price is gonna go down. It will depend, the news will come out, the FUD will go on and on and on. In strong bullish markets, look at the support lines. As long as the support lines are not breaking, as long as you're on an uptrend, as long as everything looks fine on the chart, do not listen to the FUD, because FUD will get you out of the market prematurely. The time to get out of the market is when euphoria hits in. When Ivan on Tech stops doing the good morning, crypto dailies, that's when the top is in, right? Yeah, I don't believe you. Don't believe you at all. You lie. I mean, don't even believe me. Like, open your own charts and then draw the lines, and you decide what you think is right or not, right? I mean, I could be wrong. I could definitely 100% be wrong, and this could drop towards the downside. Crypto say we can be right. Everybody else could be right. We could have some kind of news that dropped the market, down to the 10K. Richard Hart might be right on the 10K, but I gotta believe something, right? Where would I be if I didn't believe anything? Like, where would... If you do something, you gotta believe it so strongly that you are willing to put your money on the risk, reputation on the risk, everything on the risk. And if that fails, you gotta be humble enough to go back, think about what you did wrong, and then try again. Look at Meta. Yeah, the stock market, the stocks are all... JP Morgan said, guys, take profits, sell. Tesla is up 4.3% today. This is Rex Silicon, this is pumping like crazy, you guys know what this is. Amazon up, 2%. Beyond Meat. Guys, let me give you a tip on Beyond Meat. You know what Beyond Meat is? It's fake meat. And you know what's happening in the world with, they want you, to stop eating meat and all that kind of stuff. Now, we won't go into those kind of stuff and talk about that. What I want to tell you is that this thing was, huge thing up here. It was doing well and then, dropped down. Now, if fake meat comes back, it's a big if, right? This thing can explode, guys. You can get 15-20x on this thing. Hopefully after Bitcoin is done, it's rally, right? But, to go up to the all-time high and stuff like that, this thing can do a lot of X's. I'm just telling you guys. Beyond Meat, remember the name. I'm saying it right now. I'm making another Nostradamus prediction right now. Beyond Meat, if this meat, whatever they're pushing when it comes to meat, don't eat meat, and meat expensive is give you cancer and stuff like that, right? If fake meat, becomes popular again, this thing can do like 15-20x. Just so you know that. Meta up 14% now, last 5 minutes. No, it's up 2.37%. I don't know, 3.7% up here. I'll not support fake meat. Support your wife, man, and your kids. Beyond Meat is finished. I don't think it's finished yet. I mean, fake meat is not done. I think fake meat is gonna come back. Like, they tried it once, they're gonna try it again. I mean, you know, if the economy is gonna, you know, go to, you know, to not use the bad word, you know, S word. If the economy goes to S, you know, the meat will be expensive. People will look for opportunities, and they'll be looking for, you know, fake meat. And remember also one more thing, guys. One more thing. You know, people are saying we are in inflationary economy and then in deflationary economy. You know, and there is one type of economy. It's called stagnation economy, and that's the kind of thing that we are gonna go into. That's my prediction, at least when it comes to you know, what kind of depression we are gonna have. So let me show you how that looks over here. I think you guys know, but let me show you up here. Let's go to this chart over here. 1970s, where is that? Let's go to the monthly time frame up here. This is what stagnation looks like, guys. This is stagnation. This is the worst part of the market. Now, we thought we might be getting, you know, some kind of depression over here, but this is a big fast move towards downside. This is a, you know, dump down here. This is what they call depression. This is, you know, 1929, 1933 depression over here. But you know, it went pretty fast over, like 3 years and it's done. 3 years and it's done, right? It went down. You could buy down here, and as soon as you bought down here, it was just going up from over here. It's 3 years and done. This is not the worst thing that's gonna happen. This over here, 1965 to 1982, 17 years of stagnation. Look here, guys. And the reason this is the worst part is because by the time, because people cannot, you know, people, you know, normal people do well in these kind of rallies, you know, because it doesn't matter if you buy the top, you will still come, you know, you will still come up, you know, the price will still continue going towards the upside. People don't know when to buy bottoms and when to sell the tops. Only professional traders, professional investors, you know, us, we can time the bottoms. We can time the bottoms and we can buy the tops. So in these kind of environments where, you know, where S&P and you know, markets are heading right now, these kind of environments, we can time the tops, we can time the bottoms, we're gonna do okay. Normal people will get wrecked, you know, all the time. First of all, they won't be buying bottoms because they are in fear, and once the market start turning bullish at the top up here, they will start buying in. And as soon as that happens, the market will start going down. So they will get in fear and they will start selling with losses. And once they sell, the market will start recovering. They're gonna buy, and then you're gonna have a bigger move towards downside. And then no, it's gonna recover, but it doesn't recover. You get this, you know, big move towards downside. Then you have to sell at loss again. And then it goes up here, so they buy here at the top again, and then goes down again. So it just wrecks, you know, normal people, because normal people don't understand, you know, charts. They don't understand investing. They don't understand market psychology. They don't understand euphoria and fear. You know, these things that we talk about every day. They don't understand this. So normal people, moms and pops, you know, general population get wrecked. For 10 to 15 years, they get wrecked in economy because it just goes sideways. They do not understand it. They think always gonna go higher because people, you know, Jeremy Powell becomes bullish and his stuff goes up, right? And as soon as, you know, stuff goes up and we become bullish, you know, we crash towards downside. So what I'm expecting up here is this worst part of the economy to happen, right? We get into some kind of stagflation over here at the top, where, you know, they don't buy the bottoms, they buy the tops up here, and then it goes down, up and down, down. It just wrecks everybody. This is like the worst thing that can actually happen to normal people, stagflation, because they you know in some kind of rallies, bull market rallies and stuff like that, in normal, you know, good environment in markets, you know, you don't have to time the bottoms and the tops. You don't have to, you know, over time you're performing well, you're making money. Doesn't matter where you buy up here on the chart. Really doesn't matter, zero. Like even if you bought up here, like eventually it just came up here again and continue towards the upside. What's gonna destroy a lot of people is stagflation up here. This is the worst period. Remember that. See the market drop tomorrow, that would be a Bitcoin thing to do. Bitcoin is up 2.7%, guys. This thing has no break. This thing has no break. Just keeps on climbing towards the upside. Bears are wrecked. We are coming up to this stop up here at 23,895. It's quite fair stop, so I would assume this is gonna, you know, up here, just like over here previously. We came and we actually got above that top, and then we continue pumping big time towards the upside. So you might see a big pump, or might see a rejection. I'm getting euphoric. Should I sell? Too fast, too fast. These are whoop tunes. Like our plastic chicken company. Yeah, that will make it look at Nasdaq future. Yeah, how are right now Nasdaq? Dow Jones actually pulled back up here on the 4-hourly, but it had this very nice. But the Dow Jones, look here, on the dollar. How do we do this, guys? How do we do this on the dollar? How do we do this? Imagine that. Nasdaq, yeah, Nasdaq is going up to the resistance up here, and S&P 500 up here is breaking this rising wedge. I think it's stupidly, but this move up here on S&P 500 is stupidly bullish. I'm back. What happened? We bullish. That's what happened. Yeah, we ripped after one of last Fomc meetings, and then gave it all back the next day. I want to FOMO long so bad. Refam, you didn't buy in, man. You didn't buy in. God damn it. You didn't buy. How could you not buy in? Yeah, so what I think is happening over here is, you know, shorter capitulation phase. That's gonna, you know, wreck everybody. Shame on me. Refamon, I gotta ask you. I gotta ask everybody who didn't buy. Who is your favorite YouTube? Who are you listening to so you didn't buy? Who was being bearish and you didn't buy? At 16k, at 70k, at 80, at 90, at 20k. Who were you listening to? Which YouTuber? Yeah, and altcoins are performing well. 2 to 5 to 7%, like very nice moves on altcoins. Atom is up 10%. R is up like 15% up here. ILV up 8%, Gala up 4%, NG up 3%. This is just gonna continue. Wow, Altros down 45%. Who rug pulled this thing, man? 20% on OP. Jesus. What if we crash now? You can hope. At 16 we lost hope and shorted. I only wedge Benjamin, you and sometimes Stone Crowd. Rest is all due on research. Nice. I bought all the way down. Well, actually I was afraid of the meeting, of the burn last meeting. Okay. Yeah, but I said that today. This is the first meeting we are having in a bull market. And it's different than the bear market meetings. You gotta understand that, because once you break once you bottom out and you start going towards the upside, you also know that the news they're gonna try to change the news. We also already saw on S&P 500 and the stock markets, they are turning bullish. They are talking about bullishly about things. Stuff is coming a little bit down. They are changing the definition of what inflation is and how they're gonna calculate it. So you already know that they are gonna be there's gonna be a little bit different than previous times. So it's good. It's good, guys. It's good, guys. I don't know how high this is gonna continue on the daily time frame. What are we gonna get above the resistance up here? We are very close to the daily resistance up here. We already got the bearish divergence. So here is the bear's hopium, guys. Here is the bear's hopium. Where is the bear's hopium? Here is the bear's hopium, guys. And I'm not saying this cannot happen. We got a bearish divergence up here, so be careful, because over here we got a bearish cross on the daily. Of course, if you continue pumping, if you are stupidly bullish, you can just continue towards upside. This is the bearish hopium, guys. You got a bearish divergence, big time. We got a bearish cross on the daily time frame. We gotta go down, guys. We gotta go down. Can we go down? Definitely, 100% we can go down, and we're gonna find out tomorrow whether we go down or not. But if this things just continue pumping up, if it goes a little bit down and then you see strong support kicking in, you gotta assume that dips are for buying. Just remember that this is the hopium. So every bear is gonna be talking about this divergence. You can watch any kind of YouTube channel right now. After today, if this line gets above 23.7 and close above 33.7, everybody's gonna be talking. Oh, we got a bearish divergence. And what did I tell you about the bearish divergence, guys? It's leggy indicator. It can just continue pumping over here, and it will avoid the divergence eventually, right? If it just continues pumping up here, it will avoid the divergence eventually, right? So it is a very leggy and very scary indication of a reversal, because you don't know if it's gonna stop and reverse. You gotta look at the resistance levels, you gotta look at how the price is acting. Is it managed to break some kind of resistance level on the small time frames, you know, and look for reversal patterns and so forth, so forth. But this is what they will be. If we close above 23.7k, they will be talking about bearish divergence. That's the hopium they're gonna be, you know, leeching onto. The early adopter told me not to buy. The early adopter? Who is the early adopter? I don't know. They're gonna rug pull us. Nah, any coins. They're still talking that this is the bull trap. There is no bull trap, guys. There is no bull trap. You actually look into buying at this very moment. All of the coins! Everything is going up, like. But of course, it can, you know, you could be buying euphoria and it's gonna rug pull on you. Want to buy 23k this afternoon, but my bank cap was down and still is. Oh, yep, yeah. Stuff happens. Okay, guys, I think we had fun. Thanks for stopping by. This was a very interesting stream. You know, of course it's interesting. We pumping, so you know it's always interesting. You know when that happens. That said, thanks for stopping by. Hope we learned something. Don't be bearish in a bullish times. Don't be bearish when trend changes. Follow the trend. Trend is your friend. Don't read the news, read the charts. You know, just because people, like even people like Michael Burry, everybody looks at Michael Burry and thinks Michael Burry is some kind of saint. He knows everything because he called the crash in 2008. He just told you to sell and, you know, we pumped. You know, stock market is still pumping. He doesn't know. I don't care if you're Albert Einstein or Michael Burry or Jeremy Powell. You don't know. The charts know. The market as a whole knows. Guys, thanks for stopping by. It's been enjoyable. I'm gonna go do other stuff. I need to eat. I think I need to. No, I actually ate. I need to drink something. I'm out of milk, guys. I'm out of milk. We could have done, you know, the trade or something like that, but, you know, I don't know. Maybe I'm gonna close my position, open a new position, you know, 100x, something like that. You know what we can do, guys? Nah, I don't want to do that. I'm tired. I don't want to trade. We got, on Bybit, we got an account, guys. We got an account. It says the late adopter 2 up here, but it is called, I changed the name of the account. Let me see if I can see it up here. $1 challenge. $1 challenge. We got an account called $1 challenge, and in that account there is actually exactly $1, and we're gonna try to get this $1 to $1 million. I mean, we haven't been able to, you know, pull the 400 to $1 million yet, but you know, $1 to $1 million. Now we're gonna try to get this $1 off the ground, and you know, doing 100x and stuff like that. We're gonna try to get this $1, you know, somewhere else beside $1. Hopefully not below $1. I mean, below $1 is gonna be bad. In what time frame? 2,000 years. So we got this $1 chance. So we're gonna definitely do 100x, you know, in the coming days and stuff like that. So that's gonna be fun. So you know, be sure to watch that. 1 to 400 million. Guys, thanks for stopping by. Yeah, you know, tomorrow a new day. We're gonna see how this closes. Be sure to watch, you know, Bitcoin Daily tomorrow or a video. I don't know what I'm gonna do tomorrow. So there's that. It's been fun. Join Bybit. You know why? Bybit. Trade with me on Bybit, guys. $1 to $1 million. How do I go from 400 to $1 million? I don't know, man. We haven't figured it out yet. We're trying. Bye-bye.